Morning students, welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. Students, today we are going to cover the conceptual framework for financial reporting. Friends, the 3 classes has already been over of this batch. We started with introduction to Ind AS and roadmap for implementation of Ind AS, right? Then friends, the second class was scheduled on conceptual framework, but since Schedule 3 and Ind AS 1 is kind of interrelated, so I decided to continue Ind AS 1 along with Schedule 3. So in the second and third classes, we have completed Schedule 3 and we have completed Ind AS 1, presentation of financial statement. Now, today is the class on conceptual framework for financial reporting. Today is the class on conceptual framework for financial reporting. Do you have any idea what this conceptual framework is all about? Do you have any idea what this conceptual framework is all about?
It's relating to measurement, recognition, presentation, and disclosure of the financial statement.
Okay. So this conceptual framework is like a boundaries, right? It's like a literature. It's like a basis on which your Indian accounting standards are getting drafted, are getting prepared, right? For example, when you was a kid and you started with play school or you started with, with UKG, LKG, nursery. So in nursery, have you directly read the words or have you started with the alphabet?
No, sir.
Alphabet A, B, C, D, right?
Yes, sir.
Alphabet से start किया होगा ना आप लोगों ने A, B, C, D, E, F, G, right? So likewise, this conceptual framework is like a alphabet, right? Which provide the words to the Indian accounting standard. Means you have 39 Indian accounting standard. How many Indian accounting standard we have? We have 39 Indian accounting standard, right? 39 Ind AS. I hope my Excel file is visible to everyone.
Yes, sir. Visible, sir.
Visible? Yes. Conceptual framework for financial reporting. Yes. We have 39 Indian accounting standards, right? And an entity, let's talk about Reliance. Reliance is a big entity. And on Reliance, almost all the Indian accounting standards are applicable. And at a minimum, I would say, out of 39, almost 29 to 30 Ind AS are applicable to Reliance Industries Limited in their consolidated financial statement. Now, Reliance is one entity and they are using almost 30 Indian accounting standard in their financial statement, right? And you understand the Indian accounting standards are there on leases, on revenue, on provisions, right? On cash flow, on presentation of financial statement, on financial instruments, income taxes, property, plant and equipment, intangible asset. So there are different Indian accounting standards on different topics, right? On different subject. When a company or an entity is applying those Indian accounting standards, right, which are on different topics, okay, in a particular financial statement, in the essence, how come all these Indian accounting standards provides the same basis of information, provide the same basis of explanation. I mean to say, how come it is possible that all the Indian accounting standard talks about the accrual concept? How come? Property, plant and equipment, you are recognizing property, plant and equipment, right? You are recognizing provisions, okay? So let's say you purchase a machinery and you haven't paid money to purchase the machinery. You will pay after 1 year. What you will do? Will you recognize the PP or not? You will recognize the PP on accrual basis. Property, plant and equipment account debit to sundry, creditors account to liability account. Yes or no? You will do that. Revenue. So you will recognize the revenue when you have completed your performance obligation. Yes or no? You will recognize your revenue also when you completed your performance obligation. Doesn't matter
Yes, sir.
that the debtor has paid you money or not, but you will recognize your revenue. Okay. Likewise, provision for gratuity. Your employee is still working, and gratuity is an item which is payable after leaving the employment. Gratuity is not payable during the tenure of the employment, right? It is payable after leaving the employment. Friends, how come this entity is recognizing the provision for gratuity every year, right? So I talked about Ind AS 16 on PP. I talked about Ind AS 115 on revenue. I talked about Ind AS 19 on employee benefits, right? So how come these different Indian accounting standard have a same kind of a essence, which is playing on an accrual basis? How come? So who is guiding them? Who is guiding them? कैसे अलग अलग टॉपिक के इंडियन अकाउंटिंग स्टैंडर्ड का जो फंडामेंटल है वो सेम है? कैसे? कौन गाइड कर रहा है उनको? कौन सा कॉमन डॉक्यूमेंट है जिसको वो यूज कर रहे हैं? विच कॉमन डॉक्यूमेंट? यस, which common document they are using? Is there any common document? It's a conceptual framework for financial reporting. Very good. Conceptual framework for financial reporting, right? So this is the underlying document. This is the underlying framework within which this Indian accounting standards are drafted, are notified, are prepared, within which the Indian accounting standard are drafted, are notified. Okay, is that clear? Is that clear, my dear friends? So
Yes, sir.
conceptual framework gives you the underlying guidance to interpret an Indian accounting standard, to draft an Indian accounting standard, and it also provides you guidance when no Ind AS is available, when no Indian accounting standards are available, right? Then this conceptual framework itself plays a role of Indian accounting standard. Okay, is that clear? So friends, due to this conceptual framework for financial reporting, right, you will find the basic essence of all the Indian accounting standard. Doesn't matter that those Indian accounting standards are related to whatever topic, but the basic fundamental of all these Indian accounting standard will be same, right? Will be same. Like all these Indian accounting standards are drafted and they are providing information which is more related to accrual basis. Like your revenue standard does not tell you that when the cash will be received, then only you have to recognize your revenue. It only says that when you read your revenue standard, it says that revenue has to be recognized when performance obligation is completed. The revenue is measured and recognized only to the extent the collection will be probable. It is not saying that the collection has to be there. It says that the receipt of collection is probable. If you are supplying your goods to a company which is already bankrupt, tell me whether there are high chances that you will receive your money or there is a very less chances that you will receive your money. Very less chances. The company is already bankrupt, right? So in that case, you will not recognize revenue. So it is not talking about cash basis. It is talking about probability of receiving a cash, probability of receiving the money in future. All these Indian accounting standards are forward looking. They are talking about going concern, right? What is a going concern assumption? Going concern assumption is a fundamental accounting assumption. Going concern assumption is a fundamental accounting assumption. Okay. So every standard, Ind AS 1 talks about going concern assumption, as I have already told you, that Ind AS 1 says that your financial statement has to be prepared on a going concern basis. But in your financial statement, there are 38 other standards are also applicable, right? So how come the essence of all those 38 standards are also kind of on a going concern basis? So basically, they are using the same document, which is conceptual framework for financial reporting. and they are taking the guidance from conceptual framework for financial reporting, right? So friends, the purpose of conceptual framework for financial reporting is into three ways. Number one, it is used for drafting the Indian accounting standard. It is used for drafting or preparation of Indian accounting standard. Number two, it provides a clarity on the interpretation of the Indian accounting standard. It provides a clarity on the interpretation of the Indian accounting standard. Number three, it helps when no any Ind AS is available. When no any Ind AS is available for any particular item, it helps that how that item is going to be recognized in the financial statement. So it provides you the definition of asset, liability, equity, income, and expenditure, right? It gives you, for example, if there is no standard which is defined on any particular item, so what is the nature of item? Let's take an example of circus animals, right? So we have a standard Ind AS 41. Ind AS 41 talks about biological asset, and Ind AS 41 talks about biological asset. When it talks about biological asset, it says that biological asset is living animal or plant. Circus animal is also living animal. But Ind AS 41, when you read the scope paragraph of Ind AS 41, it excludes those animals which are not related to the agricultural activity. Means it excludes the circus animal. Now the question comes, where the circus animals are accounted for? How come these circus animals are accounted for? The circus company, there is an international circus company, the name is Cirque du Soleil. The circus company is purchasing those animal, buying those animal. Now the question is how those animals are recognized, measured, presented, and disclosed, right? Is it an expense? Is it an asset? Because no standard is defined. So who will help? Who will help in the accounting and reporting of these circus animal? Whose help will be required? Who will guide? Friends, if there is no standard, who will guide?
Conceptual framework for financial reporting will help.
Yes, you are right, Saminathan. You are right, Chitra. Conceptual framework for financial reporting will help. Yes. So you're right, Megha. Conceptual framework for financial reporting. Right. So you, like Megha has given this assignment, right? Megha is a CFO of a company, right? And that company name is Cirque du Soleil. It's a big circus event company. So Megha is CFO there. So the promoter is asking Megha, this year you purchased crores of rupees of animals, circus animal. How will you account for those circus animal? Is it our asset? Is it an expense? Means, will we get a hit in this year only, or the hit will be spread over the lifetime? So then Megha will look at the Indian accounting standard. Since he is a chartered accountant, she understands that there is only one standard which talks about animals, and that standard only talks about those animals which are related to agricultural activity. But this circus animal is not related to agricultural activity, and hence Ind AS 41 is not applicable. Then Megha will open conceptual framework for financial reporting, because she is aware that if any Ind AS is not available on conceptual framework for financial reporting, if any Ind AS is not available, then conceptual framework for financial reporting needs to be referred, right? And then she will look at the element of the financial statement. What is element of the financial statement?
Sir, it's asset, income, expenditure, equity, liability.
Yes, it's asset, liability, equity, income, and expenditure. Then she will look at these circus animal, the money which I have spent, is it an asset? Is it a liability? Is it an equity? Is it an expense? Is it an income? Of course, either it would be an asset or it would be an expense. Okay, या तो वो asset होगा या वो खर्चा होगा, right? Asset होगा या expense होगा because you have spent the money, right? Then she will look at the definition of asset and definition of expense, and she has found that this is an asset. Okay. Now the question is, asset to hai, but how this is going to be recognized? Because when you read Indian accounting standard, like property, plant and equipment, investment property, agriculture means biological assets, and your intangible asset, all these Indian accounting standards have a recognition criteria. For example, they are saying that an item, a particular item is going to be recognized as in let's say property, plant and equipment. An item will be recognized as a property, plant and equipment when future economic benefit is probable and cost can be measured reliably. So the particular standard gives you the recognition criteria of particular item. But what is the recognition criteria of asset? Like the standard talks about, it has to be relevant, the faithful representation has to be there. So this standard has given you the recognition criteria also. Okay. So Megha will use that recognition criteria given in the conceptual framework and accordingly recognize those circus animal as an asset in the books of accounts. Now, after recognition, this standard talks about, because I told you there are 4 pillars of accounting. What are the 4 pillars of accounting?
Is recognition, measurement, presentation, and disclosures.
Recognition, measurement, presentation, disclosure, right? So Megha has finally recognized the asset, recognized that item, that circus animal as an asset, but at what value? How it is going to be measured? Like every standard talks about measurement criteria. Like your PPE talks about that an item of property, plant and equipment has to be measured at cost initially, and cost का भी definition दिया हुआ है. But what about this? Friends, again, the conceptual framework also provides you the measurement basis. It also talks about the historical cost, current cost, fair value. It also gives you the measurement basis. So Megha will use those measurement basis, and she will record those circus animal as an asset in the books of accounts. For recording, the value should be required. So then Megha is thinking how this is going to be presented and what will be the disclosures. So then the presentation and disclosure is also given in the conceptual framework for financial reporting. So friends, this conceptual framework for financial reporting is helping in 3 ways. So what is the purpose of this conceptual framework for financial reporting? It helps in 3 places. Where it helps? Help number 1. It is used
for preparation of financial reporting.
In preparation of Ind AS. It is used in preparation of Ind AS. Number 2.
It provides clarity for our interpretation of the financial.
It provides clarity. It provides clarity or interpretation. It provides clarity or interpretation in understanding Ind AS. Understanding. Third, provides guidance.
When no Ind AS available, it provides.
Ind AS is available. When no Ind AS is available. Is it clear in mind? Friends, this is a theoretical chapter, right? And in the examination, around 4 to 6 marks question is coming in this from this chapter. In May 2024, we have seen a 6 marks question that what is the fundamental characteristics and what is the enhancing characteristics. It means what is the qualitative characteristics of the financial statement. Okay, so that question has come. That question has come from this chapter. So in last 3-4 attempt, the question has asked in the range of 4 to 6 marks from this chapter, from this conceptual framework. Right? When you become a chartered accountant, this conceptual framework is very, very, very important. And as a student, you can expect a 4 to 6 marks question from this conceptual framework for financial reporting. It is complete theoretical kind of a chapter, right? And this is the conceptual framework is the basis on which your foundation stone of Indian accounting standards are lying. This conceptual framework is the foundation stone. Okay. Yes, good. I can see a lot of interaction from the students. They are writing on the chat box. Very good. And believe me, in the virtual classes, till the time you will not engage, you will not enjoy the session, right? Please try to engage. Please try to write yes, no on the chat box, try to answer. Like Megha has given the detailed answers. He has written, sir, it is used for drafting Ind AS. It provides clarity on interpretation of Ind AS when no Ind AS is available for any particular item. Conceptual framework tells what is to be done. Right? Like Geet is regularly contributing. Like Saminathan, he is regularly speaking, right? So this way, you guys can also interact, you guys can also engage, and you guys can also contribute. Okay, please contribute, please engage. Okay, yes. Okay, now let's move on. So friends, I hope the conceptual framework for financial reporting, I hope you guys are clear on this, right? Friends, as you are all are aware, our Ind AS are converged version of IFRS applicable to India, right? It is a converged version of IFRS applicable to India. So there were IFRS globally, there were IFRS, and in India, what we did, we converged IFRS, right? Globally, there was IFRS. In India, we have converged IFRS. Yes or no? हमने convergence किया है ना? We drafted our Ind AS from IFRS. This is an Indian standard. Friends, likewise, there was conceptual framework for financial reporting under IFRS, right? So this is again a global framework. This is a global framework. This is a global framework. And this global framework was issued in 2018. This global framework was issued in the year 2018. In the year 2018. So what we did? हमने क्या किया? We also drafted conceptual framework for financial reporting, but not under IFRS, under Ind AS. This is an Indian framework. And we have drafted in 2020. This conceptual framework was applicable from 1st April 2020. This was applicable from 1st April 2020. Is this clear? Is this clear to everyone?
Yes, sir.
Yeah. Okay.
Yes, sir.
Very good. Priya, is this clear to you? Saurav, Neha, Manish, Anushi, is this clear to all of you?
Yes, sir.
Okay, very good. Yes. So we understood this about this conceptual framework, that why this conceptual framework, what is the role of this conceptual framework. Now, friends, I am taking you directly to the ICAI Board of Studies material, right? Conceptual framework for financial reporting under Ind AS. I am taking you there. I hope it is visible.
Yes, sir, visible.
Friends, now what is the diameter of this entire conceptual framework for financial reporting? Okay. So friends, after reading this conceptual framework for financial reporting, you will be able to understand the objective of general purpose financial reporting, right? What is the objective of general purpose financial reporting? In Ind AS 1, you remember we have covered general purpose financial statement. You remember we have covered the general purpose financial statement. I have taken an example of Mr. Ambani. Okay. So what is general purpose financial statement? General purpose financial statements are those financial statements which are available for the public at a large. Okay. General purpose financial statement are those financial statements which is prepared in accordance with the relevant accounting standard, of the country, like Ind AS. Okay. So this conceptual framework provides you that what should be the objective of the general purpose financial reporting. This framework also provides you the guidance about qualitative characteristics of the useful financial information. Financial statements are too big, right? And the standards, the framework says that whatever information you are providing on the financial statement, it has to be meaningful, it has to be useful, right? So how an information will become a useful information? Please tell me. How an information will become a useful information?
Yeah, it should be the relevant and faithful representation and what is the purpose to represent.
Yes. So, for example, when you are reading your study material, when you are reading Indian Accounting Standard, so when you are appearing in your exam, are you writing the entire standard in thousands of pages, or only you are providing the meaningful information, useful information to support your answer to the question? You are only giving the meaningful and useful information, correct? In the standard, in the study material, like this study material is of 66 pages. Reading 66 pages is not required. In the first go, you can read this entire 66 pages, but when you are revising, when you are appearing in the exam, when you are revising, of course, the 66 pages is not required. Whatever you're writing a meaningful information. Okay. You're writing a meaningful answer, useful answer, which is useful to support the answer to your question. So likewise, the financial statement of an entity is for a year. If I talk about Reliance, why I'm taking an example of Reliance so much, it is one of the largest company of India. They have lakhs and crores of turnover. They have lakhs and crores of balance sheet size. They are so big. So if you will provide each and every information, their financial statement will spread in more than 1,000 pages. If a financial statement is more than 1,000 pages, is it readable? Whether the investors will be able to read it quickly? Answer is no. The financial information, the financial statement should not be that bulky, right? So standard says that, framework says that it should not contain every information. It should only contain the useful information. That is why the concept of materiality has come, right? The concept of materiality has come. That is why the standard says that, the framework says that your information should be material. Reliance has given 50 lakh rupees donation or 50 lakh rupees for the welfare of some, backward region. Is it a useful information? Is it a material information? 50 lakh rupees like a 10 rupee for them, 5 rupee for them, right? So, but Reliance has invested or spent 5,000 crores, 500 crores, 50 crores to develop the backward region. This information is material. The value is material, right? So why this materiality concept is important in preparation of financial statement? Because you are preparing financial statement for a year, for the entity, for the companies. The preparation is for a year. If you started providing each and every information, the usefulness, the relevance of the financial statement will be lost. Okay. So friends, this framework also provides you the qualitative characteristics of useful financial information. As rightly mentioned by Swaminathan, that what is the qualitative characteristics? There are two kinds of qualitative characteristics: fundamental characteristics and enhancing characteristics. We will discuss that. Fundamental means it is assumed, minimum, basic above. Like the information should be relevant and information should present faithful representation. It has to be relevant means it has to be material, it has a predictive value, it has a confirmatory value. We'll discuss that. Okay. So there are two kinds of characteristics of useful financial information: fundamental characteristics and qualitative characteristics. Okay. Fundamental means minimum, basic, mandatory, assumed. Enhancing means it is required. Okay. It is required. It adds the beauty to the financial statement. Third, after reading this framework will help you to appreciate the concept of financial statement and the reporting entity. While you guys are aware the concept of financial statement, yes or no? Do you aware the concept of financial statement? What are the component of the financial statement?
Yes, sir. Aware, sir. Balance sheet and the statement of profit and loss account and the statement of cash flow, statement
Cash
of
flow
changes in
changes in
equity,
equity P&L.
and notes to the account.
Yes. So after Saminathan, I think some other student was also speaking. Yeah, please tell me.
There is statement of profit and loss, balance sheet, changes in equity, note to account, and cash flow.
So balance sheet, statement of profit and loss. Saminathan, it is not statement of profit and loss account. It is statement of profit and loss. Either it has to be statement or it has to be account. Okay. So balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts and other explanatory information. These are the 5 components of the financial statement, right? So this framework says that these are the 5 components of the financial statement and what financial statement presents. So like financial statement presents financial information, right? It provides you financial position. Which component of the financial statement provides the financial position?
Balance sheet.
Balance
Balance
sheet.
sheet.
Balance sheet, sir.
Yeah. Balance sheet provides the statement of financial position. Which statement provides the financial performance?
It's a statement of profit
Statement.
or loss and statement of changes in equity.
Statement of profit and loss and statement of changes in equity provides the financial performance. Okay. Because statement of changes in equity provide the shareholder performance, which includes your share capital and reserves and surplus also. A statement of profit and loss provides you the financial performance. Okay. Statement of P&L, statement of changes in equity, then statement of cash flow. What it provides? Statement of cash flow. It provides you the liquidity performance of the entity, right? That whether the entity is cash rich or not. For example, when you see the financial statement of Vodafone Idea Limited, you are an investor, okay? You are analyzing the financial statement of Vodafone Idea Limited. Vodafone Idea Limited is bleeding into losses. They are bleeding, means they are recognizing losses in every quarter, big losses, huge losses, okay? So as an investor, you wanted to see whether the company is able to generate sufficient oxygen, means to survive, right? So when you go to the P&L, you will find that, oh my God, this company is regularly into losses, not a good company, right? When you go to the cash flow statement, you will find that the losses is due to the heavy depreciation also. And whether depreciation is a cash item or a non-cash item.
It's a non-cash item, sir.
Non-cash item, sir.
It's a non-cash item. You have already paid money to purchase the fixed assets. Now you are charging depreciation over the useful life. It's a non-cash item. Means, so when you look at the cash flow statement, you will find that Vodafone has a positive cash flow from operating activity. Vodafone has a positive cash flow from operating activity. Means if it has a positive cash flows from operating activity, in that case, it means it is able to generate sufficient cash to meet the operations of the company. Yes or no? Right? Operating activity provides the operations of the company. Okay. So friends, this cash flow statement provides you the cash position of the entity, liquidity performance of the entity, and notes to accounts. It provides you the qualitative and quantitative information about all the other component of the financial statement and the quantitative and qualitative information about the company as well. Okay. And who is the reporting entity? Reporting entity is an entity who is reporting the results, who is reporting the financial statement, who is preparing the financial statement. Okay. So this conceptual framework, again, I told you, you must be thinking, sir, what the basic things you are talking about? This conceptual framework is a base, right? It is a base. Since you are aware about all these aspects, because you have already covered Schedule 3 and Ind AS 1, okay? But had this chapter been, taken at the beginning, of course, all these things which you are aware, probably I was talking about those things, right? This standard also talks about the various elements of the financial statement. What are the Panch Tattva of the financial statement? Miruna or Priya, you need to speak this time. Miruna or Priya? What are the element of the financial statement? पंच तत्व कौन से हैं फाइनेंशियल स्टेटमेंट के? प्रिया, Priya has written on the chat box. Yes. Asset, liability, equity, income, and expenditure. You're right, Priya. So these are the 5 elements to the financial statement. Okay. So this framework also gives you the definition, explanation that what is an asset, what is a liability, what is an income, what are the expenses, what is meant by equity. Okay. So it talks about the various elements of the financial statement also. This standard also gives you the criteria for including assets and liabilities in the financial statement and removing them. Means it also provides you the criteria for recognition and derecognition. ये recognition और derecognition income और expense का भी होता है क्या? So income and expense is recognized but not derecognized. Derecognition नहीं होता ना, मतलब उसका recognition derecognition अलग से नहीं होता है income and expense का, right? But asset and liability का होता है, because if something is there in the balance sheet, it is only required to be derecognized. Otherwise, how come it is derecognized, right? So recognition, derecognition is only for assets and liabilities. Okay. So this framework gives you the criteria for recognition and derecognition. This framework also provides you the measurement basis. Okay, that what is the measurement basis means how that item is going to be measured. Is it historical cost? Is it current cost? Fair value, etc., etc. Right. This standard also provides you the concept of presentation and disclosure and its importance as a communication tools. For example, property, plant and equipment. Okay. In property, plant and equipment, Ind AS 16, it talks about the cost model as well as revaluation model at the time of subsequent measurement on the reporting date. Okay. It talks about that thing. It talks
Yes,
about
sir.
this thing. Yes.
Yes, sir.
Cost model and revaluation model. Now let's take an example. A company has 1000 crore of fixed asset. Okay. On 31st March 2024. Now, in the current year, the company has charged the depreciation. And after charging the depreciation, this 1000 crore, let's say the company has charged 10% depreciation. So what is the value at the end of the year? 31st March 25? Sorry?
900 crores.
900 crores. Last year it was 1000 crore. This year it is 900 crores. Now what happened? And in this year, the company has not made any addition to the fixed asset. The company has not done any deletion to the fixed asset. So 1000 becomes 900. Now what happened? So this company has opted for a revaluation model. In the last year, it was cost model. This year, the company has opted for the revaluation model. The company has opted for the revaluation model. When the company has done the revaluation, this 1000 crore of fixed asset has been revalued to 1500 crores. If the company would not have done the revaluation, what was the value? 900 crores. But after revaluation, the fair value becomes 1500 crores. The company has opted for the revaluation model and the company has valued this fixed asset at 1500 crores. So now this 1000 becomes 1500. As a user of the financial statement, when you are looking at balance sheet and when this 1000 becomes 1500, what is the first interpretation? What is the first impression which will come to your mind?
They might be purchased the asset.
Addition
to the fixed asset. Yes. The first impression which will come to your mind, oh, this company has purchased some new assets, means the company is expanding. In this year, they have added 50% of the asset. Yes or no? Yeah. This is how you will behave. This is how you will think. Oh my God, this company is expanding a lot. Because when the company will buy fixed assets, when the company has to expand, they are into the expansion. Okay. So you are thinking that I should buy the shares of this company because this company has a growth prospect and that is why they're investing in the long-term assets. Okay. But is it the right picture?
No, sir.
This is not the right picture. So how come you will be able to take a decision, and how come your decision will be the right decision? So you will be able to take the decision if you will have the sufficient disclosures about this 1000 to 1500. Yes or no?
Yes,
So
sir.
where you got this disclosure? You got these disclosure in the
Notes
Note to
account.
account.
accounts. So in the notes to accounts, when you go to the PP schedule, you will find that in the schedule, it was written that it is not addition to the fixed asset, it is revaluation of fixed asset. And then when you go to the disclosure, so in the disclosure, it was given that this is the revaluation which is done by the registered valuer. This is the valuation, etc., etc. So what this framework says? This framework says that you need to disclose the information, right? This framework talks about the appropriate presentation and disclosure and its importance as the communication tool, right? These disclosures serves as a tool to communicating these useful information to the user of the financial statement so that he can take the decision accordingly. Right? So probably when you got this information that the company has done the revaluation, so you will find and you will take an interpretation in your mind, okay, this company has not added any single amount of fixed asset in this year. It means the company is not focusing on the expansion further just to inflate the valuation of the fixed assets. This company has done the revaluation, right? Your story has just reversed. आपकी स्टोरी पूरी की पूरी चेंज हो गई. जो स्टोरी आपने पहले सोची थी वो स्टोरी आपकी पूरी की पूरी बदल गई. Yes or no?
Yes, sir.
And this
Yes,
standard,
sir.
this framework also talks about the concept of capital and capital maintenance. This framework talks about the concept of financial capital and physical capital, right? So after when I have given you this agenda, index, the explanations which I have given it to you, tell me whether you know, whether you are aware around 70-80% of this framework or not. While I'll take you through with this entire framework, but are you aware or not? For example, component of the financial statement, element of the financial statement, meaning of the reporting entity, purpose of the financial reporting, right?
Yes, sir.
Recognition, measurement, presentation, disclosure. So this framework guides you. This framework guides you that how an asset and liability is going to be recognized and de-recognized. What are the measurement bases? What is the importance of presentation and disclosure? The concept of capital and capital maintenance, right? So these are the things which we are going to discuss in detail, right? Shall I move on?
Yes, sir.
Yes, sir.
Okay. So friends, the purpose of this conceptual framework we have already covered. What is the purpose of the conceptual framework? This in the standard setting. Standard setting means drafting of standard. This conceptual framework under Ind AS assist ICAI. Who draft Indian accounting standard? कौन बनाता है Ind AS?
ICAI in consultation.
Institute of Chartered Accountant of India are drafting Indian accounting standards, right? And then who provides the recommendation? Who approves them? NAFRA provides the recommendation on those Indian accounting standard, and when NAFRA finds it appropriate, it recommends to the Ministry of Corporate Affairs. And who notify those Indian accounting standards?
MCA.
MCA, not ICI. MCA, yes. ICI prepare those accounting standard. NAFRA approves and then MCA notifies those. MCA approves and notifies those Indian accounting standard. Once Indian accounting standards are notified, it becomes law of the land. It becomes law of the land. Right? Is that clear? Okay. So this framework is helping. This framework is helping you ICI in preparation of drafting of Ind AS, and it is on the basis of consistent concept, as I told you, like accrual, going concern, materiality, etc., etc. Consistent preparation. This framework also assists the user or preparer to develop consistent accounting policies when no Ind AS applies to a particular transaction or event. Right. So this framework is also helping when no Ind AS is available for a particular item. When you will read Ind AS 8, so Ind AS 8 has not been covered as of now. Ind AS 8 will be covered in the next to next classes. So when you look at the Ind AS 8, Ind AS 8 is talking about the accounting policy. It says that if you have to draft an accounting policy on a particular item, you have to look at the specific Indian accounting standard. If a specific Ind AS is not available, then you have to go to the similar Ind AS. If similar Ind AS is not available, then you have to go to Conceptual Framework for Financial Reporting to draft an accounting policy on that particular item. And you need to apply that accounting policy consistently from one period to another, right? So one is in drafting of standards. Second is when no Ind AS is available, this framework provides you guidance for preparation of accounting policy on that particular item. Or when an Ind AS allows a choice of accounting policy, then this framework is also helping that when it is cost model, revaluation model, both are there. So then how you will provide an information which is relevant, which is useful, which is meaningful, right? So the standard gives you guidance on that. And interpreting Ind AS, this framework assists all parties to understand Ind AS, and it also gives you the interpretation of Ind AS, right? This is what we have already covered, yes or no? We have already covered the three purpose of the framework.
Yes, sir. Already covered.
In drafting Ind AS, in helping understanding Ind AS, right? And in finalizing an accounting policy when no Ind AS is available. What is the objective of general purpose financial reporting? The objective of general purpose financial reporting is to provide financial information about the reporting entity, which is useful to whom? Useful to whom? To existing shareholder, which is useful to existing shareholder, existing investor, and potential investor, lender, and other creditor, right? In earlier framework, so prior to this conceptual framework, there was earlier framework also. The name of the earlier framework was Framework for Preparation and Presentation of Financial Statement. But this framework talks about the three kind of user, three kind of stakeholder. It talks about investor, it talks about lender, it talks about other creditors. What is common in all these three stakeholders? Investor, lender, and other creditor. What is common in all these three stakeholders?
All three has given their money to the company.
Absolutely right. All these three stakeholders have given their money to the company. Investors has invested by way of buying a share in this company. Lender has given a debt to the company. Creditors has given their goods and services on credit to the company. Yes, all has invested their money into the company, right? So, this conceptual framework is such a relevant framework that earlier, the old framework was talking about user of the financial statement, and who could be the user? Employee, customer, regulator. These can also be the user of the financial statement. Investor, lender, creditor, regulator, government, right? Everyone. So then this framework says that employee. So employee, when he is working in the company, is not invested money in the company, is working in the company, right? And when he joined, he never joined only by looking at the financial statement, right? So customer, he is buying the goods. Okay. So he is getting the goods. Okay. Government or regulator, they have not invested in the company. While they can get the information from the financial statement, but who are the primary user? To whom the financial statements are mandatory, to whom the financial statements are very, 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 very important. It is the banker who has given the money to the company. He is interested to know whether I will be able to receive my money back or not. It is the investor who wanted to understand whether I will be able to get the dividend on the money which I have invested. What is the profit the company is making? The creditor who are interested, whether we will be able to get our money back or not, right? So these are the actual investors, actual people who have given their blood and sweat to the company, right? And that is why this conceptual framework talks about the useful information of the financial information, the useful information in the financial statement, the useful financial information to the investor, lender, and other creditor. So always remember, in the question, in the examination question, if a multiple choice question will come, right? If a multiple choice question will come, that this conceptual framework is relevant for regulator, employee, and the creditor. Then the second option is investor, lender, and creditor. So you will always remember that this is applicable to all the three categories who has invested their money, and you will get the answer. Whether employee has invested the money?
No, sir.
Whether government has invested the money?
No, sir. Sometime grant will be provided.
Yes, grant will be provided. They are interested in the only, if it is conditional, that condition of the grant is not. Otherwise, grant will be refunded. Okay. But if the government, like in public sector undertaking, government is a shareholder. So as an investor, they are related to this. Okay. So when
Yes,
government is acting in the capacity of shareholder, then it become an investor. Okay. So you just need to ask the question whether these guys have invested in the company. You will find that yes, lender, shareholder, creditor, these guys have invested in this company. Okay. So they need to got the useful and meaningful information to take the decisions, right? And these decisions involve decision about buying, selling, or holding equity and debt instruments, providing or settling loans and other form of credit, exercising right to vote on or otherwise influence management action that affect the use of the entity's economic resources. What is meant by in this framework? You will find the word economic resources is used and the word claims are used. What is the meaning of economic resources? What it denotes? What it presents?
It's asset. Economic resource means asset of the company.
Yes, economic resources means asset of the company. Claims means liability of the company. Claim means liability. You are right, Chitra. Economic resources means asset of the company. Claims means liability of the company. You are absolutely right. Yes. So, what is the objective and purpose of the financial reporting, general purpose financial reporting? It provides the financial information about the economic resources of the entity, means it provides the financial information about the asset of the entity. And claims against the entity means liabilities of the against the entity, and changes in those resources and claims, changes in the capital structure of the company. Okay, right? Shareholder performance of the company. Assessment of the amount, timing, and uncertainty of future net cash flows, net cash inflows to the entity, and the management efficiency of the entity's economic resources. They wanted to understand that what is the future inflows of the company and outflows of the company. When they are looking at the assets and liability, they will be able to estimate, they will be able to understand, and it provides them to the expectation, it helps them in expectation of returns, that is dividend, principal and interest repayment, market price increases, etc. These useful information is helping in taking a decision by the investor, lender, and other creditor, right? So this is the objective of the general purpose financial reporting. What is the objective? To provide the useful information, meaningful information to the investor, lender, and creditor in taking the decisions. Okay. What is the limitation of general purpose financial reporting? Kya hai limitation? This general purpose financial reporting, this is giving the past information. This is giving the past information, right? In general purpose financial statement, these are not providing you the forward looking information. Are they providing the forward looking information that what will be the future of the company? What will be the kind of, profitability in the company in the future? What is the kind of revenue the company will earn in future? It is a financial statement as it or for the year ended 31st March. Okay. So normally, what is the business outlook? What is the future of the company? What is the potential of the company? Generally, the investors, lenders, or creditors, they are reading the financial statement in line with reading the other sections of the annual report. Like what? management discussion and analysis report, corporate governance report, business responsibility and sustainability report. So they are looking at the other section like chairman's speech, board of directors report. So they are reading those reports in conjunction with the financial statement to understand the future of the company as well. The financial statement does not provide the future of the company. Second, it gives you the value of the assets and liability. It gives you the value of the assets and liability, but it does not provide you the value of the entity, right? The valuation of entity is not forming part of the financial statement. So these are the limitations of the financial statement, right? This is what it is written here. Information provided by the general purpose financial report. What are the information? It gives you financial position about asset, liabilities, okay? Economic resources, claims. It also gives you financial performance, which is your profit and loss and other comprehensive income. It also provides you financial information, financial performance, the liquidity performance, which is provided by the cash flow statement. And it also provides you the financial performance from the changes not resulting from the financial performance. Means it gives you, for example, the changes in equity, your right issue, buyback of shares, right? Your increase in reserves and surplus. So these are the kind of, the financial information which is provided by the general purpose financial statement. This is what it is written here. Okay. Now, very, very, very important aspect of this entire framework of financial reporting. Qualitative characteristics of useful financial information. Friends, any doubt up to this level? Any doubt? So we have read objective of general purpose financial reports, and we found that the objective is to provide the meaningful information, useful information to investor, lender, and creditor. And what is the objective of general purpose financial report? It provides you the financial position, financial performance, liquidity performance about the element of the financial statement: asset, liability, equity, income, and expense. Okay. Qualitative characteristics. Qualitative feature of useful financial information. Useful financial information. So how come a financial information will become useful? Swaminathan has told, sir, for becoming a financial information as a useful financial information, it must be relevant and faithfully represent for what it's supposed to represent. It must be relevant and faithfully represent. Right? Faithfully represent. For example, for making a financial information relevant, it has to be material. It will provide your predictive value and confirmatory value. What is meant by predictive value or what is meant by confirmatory value? Right. So we will talk these qualitative characteristics into two parts. Number one, first we are talking about fundamental characteristics. Please write down fundamental characteristics. And what is the fundamental characteristics? There are two fundamental characteristics. Number one, relevant, and number two, faithful representation. Then we will be talking about enhancing qualitative characteristics. So first, fundamental characteristics, then enhancing characteristics. Okay. Then we will be talking about the comparability, verifiability, timeliness. Those aspects we will be talking about. So there are two characteristics of the useful financial information: fundamental and enhancing. ENHANCING. Fundamental characteristics and enhancing characteristics. Okay. What are the fundamental characteristics? The first fundamental characteristics are relevant. Okay. So qualitative characteristics. Qualitative characteristics. Useful financial information, right? Number 1, A. What is A? Fundamental characteristics. Fundamental characteristics. Okay. And what is the fundamental characteristics? What is the fundamental characteristics?
Relevant and faithful.
Relevance,
Relevant. The information has to be relevant and faithful
representation.
And faithfully represent. These are the two fundamental characteristics. Then we are talking about enhancing also, but let's stick to the fundamental characteristics first. The information has to be relevant and information should be faithfully represent. It should faithfully represent. Okay. So the following chart will explain what is considered as a relevant financial information. Financial information with predictive value or confirmatory value, right, makes it capable of making a difference in decision made by the users to make it a relevant financial information. Friends, there are three legs to the relevant financial information. 3 legs to the relevant financial information. Number one, for making a financial information relevant, it has to be that information needs to be material. That information should provide the predictive value and the information should provide the confirmatory value. मैंने कौन सी 3 चीजें बताई? Which 3 aspect? The information should be material information. It provides predictive value. It provides confirmatory value. Predictive value or confirmatory value, right? Correct? Material information, you understand? Material, you understand?
Yes,
sir.
it affects the financial decision of the user.
Yeah, so Megha, so probably this is the last version, but there is no major change in this version versus the uploaded version. Okay, there is no major change. Okay. Yeah. So material information means the information which is impacting the decision-making capacity of the user of the financial statement. Okay. It has to be material. Now, what is the predictive value? So friends, for example, when you are looking at the financial statement, right? So the financial statement provides you the comparable numbers and the current year number, correct? It provides you the comparative number and the current year number. So by looking at the past information, by looking at the comparative number, and for example, if you are an investor and you are looking at the current year revenue of the company, and you are looking at the last year revenue of the company, and you are saying the revenue is grown by 10% this year, and you are looking at the old financial statement also, and you are looking at a trend of 8 to 10% growth in the revenue every year. Okay. So what you will predict for the future? What you will forecast in the future? The conservative forecast as an investor, what you will forecast?
Revenue will increase by minimum 8%.
Revenue will increase in the line of 8 to 10%, right? This is what you are predicting for the next year. Yes or no?
Yes, sir.
So using the information, using this relevant information, you are predicting the future values. You are predicting that what will be the performance of the company in the future. So means all those important information needs to be provided, which is useful to the company, which is useful to the user of the financial statement, investor, lender, and creditor, for taking a decision about the future, right? So financial information has a predictive value if it can be used as an input to process employed by users to predict future outcomes. Financial information need not be a prediction or forecast to have predictive value, but financial information with predictive value is employed by the users in making their own predictions, right? आपको आगे का नंबर नहीं देना है, आपको नहीं बताना है. Management is not responsible. It is not obligated to present that in future. Like every company is preparing their budget. but they are not allowed, they are not required to just publish their budget to the public, right? They're not required. Okay. But the financial information is in such manner that it will provide a predictive value, means the important disclosure, the qualitative aspect needs to be provided. For example, this year the revenue has been grown by, let's say, 50%. Okay. There was a exceptional item which was sitting in the revenue. So management needs to provide the disclosure that why there is a windfall gain in the revenue. Why? Right? So that when the user will read the information, the user will be able to process this input in their predictions. Okay, this is a one-time gain. This is kind of a compensation this company has received. This is a one-time gain which was received by the company. If we will remove this one-time gain, then it is the growth is not 50%. The growth is only 10%. Right? So whether user will predict after getting this disclosure coupled with this information, whether user will predict a growth of 50% or only 10%.
10%.
10% because user को पता लग गया, investor को पता लग गया कि 40% तो on account of windfall gain है, one time gain है, right? So the information provided has to be a relevant information so that it can provide a guidance to the user of the financial statement to make their own predictions. Have you understood this? Have you understood this?
Yes, sir.
Likewise, in my earlier example of property, plant and equipment, where 1000 crores becomes 1500 crores from shifting from cost model to revaluation model, right? If the adequate disclosure would not have been provided, what is the prediction in the mind of the user? That the company is expending. Company is expending, okay? But when the appropriate disclosure have been given, now this user, what he is predicting, the company is not expending. The company has inflated the value of the asset by using the revaluation model. Are you getting the meaning of predictive value?
Yes, sir. The auditor also will provide an audit report in the CAM, key auditor matter,
yes,
when there is a significance to important to read the understanding of the users.
Yes, you're right. Okay. So confirmatory value. So predictive value, we have understood that the user is processing those information from the financial statement to provide its own forecast. आप भी बोलते हो ना कि आपने एक कंपनी का शेयर खरीदा. You must be talking to your friends or your friends must be talking to you. Yeah, I have purchased a share of Reliance Jio. Why? Because Reliance Jio is expending a lot. This time they have made a profit of 500 crores. In the next year, probably they will be making a profit of 1000 crore. Your friend is asking why. Then you are saying, they have done a tie-up with BlackRock. Now the data says that they will be able to, add 5 million users, 10 million users. So you are using the information in the current year financial statement and you are making your own assumptions, own predictions that where Reliance Jio will go. Okay. So the financial statement should provide an information which can give you a predictive value. You will be able to make your predictions. Okay. What is confirmatory value? Same way, whatever predictions you have taken that my revenue will grow by 10%, right? The last year prediction which you have taken that revenue the revenue should have grown by 10%. Whether the revenue has actually been grown by 10%, so it will give you confirmatory value. You understood? So when you have done some predictions in the past and whether it has happened in the current year, it is known as a confirmatory value. On the basis of inputs in the current year, when you are predicting the future, it is known as a predictive value. Okay. So for making a useful information relevant, it has to be a material information. There must be a predictive value, indication of predictive value, and there must be a confirmatory value. Okay. Example, revenue information for the current year, which can be used as the basis for predicting revenues in future years, can also be compared with the revenue predictions for the current year that were made in the past years. The results of those comparison can help a user to correct and improve the processes that were used to making those previous predictions. So to cut a long story short, What is the qualitative characteristics of the useful financial information? There are two kinds of qualitative characteristics: fundamental characteristics and enhancing characteristics. In fundamental characteristics, there are two characteristics. The useful financial, for making a financial information useful, it has to be relevant. For making it relevant, the information should be material, it should provide predictive value, and it should also provide confirmatory value. Is that clear? Now, what is faithful representation? What is faithful representation? For making an information, for presenting an information, faithful representation, right? It has to be a complete information. It has to be a complete information. Your 1000 crore of PP becomes 1500 crores. Is it a complete information? Is it a complete information? No. So
No,
how
sir.
come an information will be complete? The information will be complete when, in addition to the balance sheet, you will provide in the notes to accounts the breakup that this class of asset in your PP schedule. You must have seen PP schedule. There is a gross block, there is a net block, there is a accumulated depreciation, there is a class of asset. Okay, so you will provide in which class of asset the increase is there, and whether this increase is on account of addition or on account of revaluation. So you need to write that. Then you are also disclosing whether this valuation is through a registered valuer or unregistered valuer, right? Then you're also writing what is the revaluation impact. So by giving all these information, you are completing an information, right? So the information, right? The information, what it was intended to present after this disclosure, this is in presenting that faithful representation, right? So after reading all these information along with the property, plant and equipment, where the note referencing is given, in the note number all this information is given, it makes the information complete and it helps in faithful representation of that item. Okay, right? Is that clear? Is that clear? For example, if the company has pledged, the entire factory, the entire property, plant and equipment and taken a loan, right? So it is a very important information for the user of the financial statement. He should be aware that while the company is able to get the money from the bank, but at the same time, the company has mortgaged all the assets, all the property of the company, right? It's an important information, right? So the investor will be able to take the decision when he will have a complete information, right? When the information will be complete, then only it will be able to represent a faithful representation. Is that clear, Megha? Yes. Are you able to understand these aspects, right? And that is why all the Indian accounting standards, if it is relating to asset and liability, it is giving you recognition criteria, measurement criteria, presentation, disclosure. Why? From where it is coming from? It is coming from conceptual framework, right? Are you able to appreciate the discussion or not in the last 1 hour and 15 minutes?
Yes, sir. Very much appreciated, sir.
Yes, sir.
Everyone? Yes?
Yes, sir.
Yeah. So we talked about this fundamental characteristics. We talk about relevant. For making an information relevant, it has to be material. It can provide predictive value. It can provide confirmatory value. Then the information should represent faithful representation, right? For presenting a faithful representation, the information should be complete information. The information should be neutral, means unbiased. The information should be unbiased. So a neutral depiction is without bias in the selection or presentation of financial information, right? A neutral depiction is not slanted, weighted, emphasized, de-emphasized, or otherwise manipulated to increase the probability that financial information will be received favorably or unfavorably by users. For example, when you have done the revaluation, you just need to provide that what is the revaluation impact, or is it through registered or unregistered valuer or not. For example, the standard says that you have to get it done through a registered valuer. Okay, you have not done through a registered valuer. Why? Because when you went to registered valuer, he was giving you the valuation of, let's say, 800 crores, right? But then you have gone to the unregistered valuer and you manage to get the valuation of 1500 crores. So you are writing a biased information that the registered valuer was asking, lakhs and lakhs of money, and that is why the company has not done that, and the company has gone to this particular valuer who is having a good brand name, this, that. Means the company is emphasizing or de-emphasizing to influence the user of the financial statement, right? They are emphasizing or de-emphasizing. Okay. So friends, the information should be neutral. Information should be neutral means only you need to provide a relevant information. Okay. You are not required to overemphasize or de-emphasize. Free from error. Your information should always represent a faithful representation if it is free from error, right? Means there should not be any error. Free from error means there should not be error or omission in the description, and the process to use to produce the reported information has been selected. For example, useful life of the PP. When you are evaluating the useful life of the PP, the proper estimate has to be made, right? When you are calculating provision for gratuity, while computing the attrition rate, while computing the salary increment rate, you have to take a proper assumption so that your output will come proper. Your output will be proper, right? So for representing a faithful representation, the information should be complete. It should be neutral, means free from bias, unbiased, and it should be free from error. It should be free from error. So what is your fundamental qualitative characteristics? What is your fundamental qualitative characteristics? Relevant and faithful represent. And what is faithful represent? What is faithful represent? The information should be complete.
Neutral.
Complete information should be neutral, and information should be free from error, right? And substance over form also, right? So information should reflect substance over form also, for which it is intended, substance over form also. Okay. While you can see in many circumstances, substance of the economic phenomenon and its legal form are the same. If they are not the same, providing information only about legal form would not faithfully represent the economic phenomenon. So substance over form is also important. Okay. Substance over form. I hope the Excel file is visible to everyone. Is it visible? Excel file?
Yes, sir. Yes, sir. Visible, sir.
Substance over form. You guys are aware about the substance over form, right? So what is a faithful representation? Useful information is represented faithfully when the concept of substance over form is beautifully applied, the information is complete, and the information is neutral, and it is free from error. It is free from error. Is that clear to everyone? Clear in mind or clear from mind?
So clear, sir. I have one query on the neutral, emphasized or de-emphasized. What is meaning for emphasis and de-emphasis on this in this key
So
matter, sir?
emphasis and de-emphasis means, for example, you are emphasizing only on a particular item. For example, you have done the revaluation, okay? And when you have done the revaluation of building, so you are emphasizing that, the building has been revalued from 10 crores to 30 crores because the building is such a beautiful building. Building is having such a feature, this, that, right? So by writing so much about of that building, it has created the impression in the mind of the user of the financial statement that this building will grow further. This building will grow further. Okay. जैसे क्या होता है, जब आप कभी कोई प्रॉपर्टी खरीदने जाते हो, when you go to in the market to buy the property, and this is a classic case, right, which I have already witnessed. When you go to the property dealer, he is so emphasized about that property. See, this is a beautiful property, and believe me, a lot of buyers are coming to buy this property. If you want to buy this, then do it today itself, or do it tomorrow, maximum, not later than tomorrow, because there are a lot of persons who is running behind this property, right? And the market is increasing. Whenever you go to the builder, he will say that day after tomorrow, we are increasing the prices. Yes or no?
Yes, sir.
आपने सुना होगा ना ऐसा कभी, राइट? और ऐसा बहुत ही होता है. कभी आप बिल्डर के पास वैसे ही चले जाओ, बोलो कि आई नीड टू बाय द प्रॉपर्टी, He will say
Yes,
this is
sir.
a good time, this is the right time, because from 1st of this month we are increasing this price, and believe me, he will not increase, but he will say this story to everyone. Means he is so overemphasizing. He is so overemphasizing that he is influencing by overemphasizing on a particular aspect. He is influencing and dictating the decision of the user of the financial statement. De-emphasizing means the emphasis which is minimum required. For example, it is required to present whether the valuation is done by the registered or unregistered valuer, if even he is not writing that, right? So this is the meaning of overemphasizing and de-emphasizing.
Thank you, sir. Thank you so much.
Okay. Enhancing qualitative characteristics. Fundamental means basic, like fundamental accounting assumption going concern. What is enhancing qualitative characteristics? Enhancing qualitative characteristics are your financial information will become useful financial information when these qualitative characteristics must be there, right? The usefulness of the financial information is enhanced if it is comparable, verifiable, timely, and understandable, right? Comparable, verifiable, timeliness, and understandable, right? So what are the enhancing qualitative characteristics? कौन कौन सी enhancing qualitative characteristics हैं? बताइए कौन कौन सी हैं enhancing. Your enhancing characteristics are comparable. Your information should be comparable, right? Comparable from the last year to this year. Okay. Comparable from one company to another company. Your information should be verifiable. Verifiable means either it could be from direct sources or from indirect sources. For example, let's say depreciation. So you are looking at the past trend of the company. You found that depreciation rate is around 10 to 15%. This time the depreciation is increased. So when depreciation will increase, what is the first perception which come to your mind? The fixed asset has also increased. Or when fixed asset will increase, your depreciation should have increased. Yes or no?
Yes, sir.
Right. This is known as your verifiability, right? Your financial information which is given, those financial information will also be interrelated, right? If one, for example, if sales is increasing, then if revenue is increasing, then what comes to your mind? Either
Cost will
data,
increase.
either data will increase or your cash will increase,
Yes, sir.
right? And of course, your profit will also increase, right? So the information should be verifiable. It is interrelated. It could be verifiable, right? So the information should be comparable. It has to be verifiable. Timeliness, right? If somebody will give you that, 2 years back, you are getting results today for less than for more than last 2 years. For last 2 year, 31st March 23, you are getting the results today. Whether those results will be relevant and important for taking a decision today. If I'm giving you the results as of 31st March 23.
No.
This is highly stale information, bossy information, highly stale, right? So the information will only become useful information if it will not be delayed a lot. Okay, if it will not be delayed, because the investors, lenders, and creditors will take the decision on the basis of the latest financial statement, on the basis of latest results. That is why for the listed companies, what SEBI told, what SEBI requires, Securities and Exchange Board of India requires to file their quarterly results within how many days? Within how many days? Within
15 days.
45 days. Within 45 days from end of the quarter, right? In case of quarter 1, quarter 2, and quarter 3. For the year end, quarter 4, 60 days from end of the year, right? So why SEBI has given these timelines? Because these are the listed companies and users requires the latest information. The year end financial statement will come after a year. So SEBI has told that for the first quarter, like 30th June, you need to file your financial statement, maximum by 14th of August financial results. For 30th September, maximum by 14th of November. For 31st December, maximum by 14th of February. For 31st March, maximum by 31st of May. Right? So comparable, verifiable, timeliness. Then what is the last one? What is the last one? Understandable. Your financial statement should be understandable. Means your financial statement should not be in like a kind of a, the English with lot of jargons. होते ना business idioms होते हैं ना. For example, I am telling you, you have to work hard. Are you able to understand this statement? You have to work hard. Easy है ना, मतलब इस लाइन को आप समझ गए, you have to work hard.
Yes.
But if I, instead of saying you have to work hard, I will say you, see, you have to break the furniture. Right? Your effort should be like that. You have to break the furniture. You have to hit the road tomorrow. Are you able to understand these kind of idioms? These kind
No,
of
sir.
phrases? Right?
No, sir.
While these are the business idioms, right? So when I'm talking to my team, I'm telling them, you have to break the furniture. So you like a simple student, you will be thinking like, oh, I have to break the furniture means I have to break my chair and table. You become aggressive, right? So break the furniture means you have to work hard, kind of. So the point is, probably this preparer of the financial statement, they are big shot chartered accountants, right? They are the CFOs. They know good English. So your financial statement should be in simple, understandable language. See, these kind of small things is written in the conceptual framework. Okay. So friends, this was a 6 marks question, came in May 2024. So when this question comes, what is the qualitative characteristics of useful financial information? You have to write in your language with an example, right? That for making a financial information useful, there is a fundamental characteristics and enhancing characteristics, right? Qualitative characteristics. In fundamental characteristics, for making a financial information useful, the information has to be relevant and it has to present faithful representation. Okay. Then you have to explain what is relevant. The information has to be material. It can provide the predictive value to the user of the financial statement, and it also supports the confirmatory value. And you can take an example here. And for example, by looking at the trend of the revenue, they will be able to predict that what is the revenue growth. If there is any exceptional item, it has to be disclosed separately so that the user will be remove those outlier one-time impacts to predict the future impacts, or whatever they have predicted in the past, they will be able to confirm whether the past predictions is in line, whether the current year number are in line with the past predictions or not, right? So they need to correct and they need to improve while taking the future predictions by having a confirmatory value, right? The information should be on the basis of substance over form, right? And it has to be complete, neutral, and free from any error. For the enhancing qualitative characteristics, the information should be comparable. It has to be verifiable, and the timeliness providing of information is at most important. Like Securities and Exchange Board of India, they require to publish the financial results by the listed companies but within 45 days from the end of the quarter and within 60 days from the end of the year, and these financial information has to be understandable. Okay, is that clear to everyone? Yes or no?
Yes, sir.
Yes, sir.
क्या
Very
ये
much
आपको
clear.
याद हो गया? याद हुआ
Yes,
नहीं हुआ?
sir.
Yes, sir. हो गया.
हो गया याद? Yes, very good. Important, right? So we have covered this part. Friends, now let's have a 10 minutes break. It's 8:30 now. We'll start at 8:40. Okay. Yes. Yeah, so Megha, I have presented the latest this study material, okay? While there is no change from that, but I have downloaded this. Yes. So friends, what we have covered so far, we have covered objective of the general purpose financial reporting. So let me take this here. If I talk about this thing, so purpose of the conceptual framework, right? Purpose of the conceptual framework. We have covered the purpose of the conceptual framework, right? Purpose of the conceptual framework. And what is the purpose of the conceptual framework? It used in the preparation of Ind AS A, B, and C. A, B, and C. A, B, and C. This is the purpose. Second, what we have covered? Second, we have covered objective of the general purpose financial reporting. Second, objective of the, हमने किया है ना ये objective of the general purpose financial reporting, right? And this is relevant for whom? This is relevant for whom?
Investor, potential investor, lender, and creditors.
Yes. Investor, lenders, and creditors. Always remember for three kind of people: investor, lenders, and creditors. Right? What is the objective? Objective is to provide useful financial information. Objective is to provide useful financial information for the decision making of whom? Investor, lenders, and creditors. Okay. Then it provides, number 3, it provides qualitative characteristics, fundamental characteristics, and enhancing characteristics. Okay. Fundamental and enhancing. So in fundamental, information has to be, information will become useful information when it is relevant and when it is presenting faithful representation. When it become relevant, when it is material, having a predictive value, having a confirmatory value, right? When it becomes your faithful representation, when it is presenting the faithful representation, when there is a substance over form. So substance over form is there, the information is complete, neutral, and free from error. And what are the enhancing characteristics? The enhancing characteristics are comparable. The information should be comparable, verifiable, timeliness, and understandable should be there. Okay. Right. Now the fourth part. What is the fourth one? What is the fourth one? क्या है fourth? मैंने आपको क्या बताया था fourth? What is fourth? Financial statement and reporting entity. It talks about financial statements and reporting entity. You understand financial statement? We discussed also. You understand
Yes.
financial statement and reporting entity?
Yes,
Yeah?
sir.
Yes. So what is the objective of the financial statement? Is to provide financial information about the element of the financial statement: asset, liability, equity, income, and expenses. Okay. So financial statement part we have already covered that, right? Reporting period is your reporting year. Okay. So this story is given, perspective adopted, that the transaction and events has to be prepared on accrual basis, going concern basis. Who is the reporting entity? A reporting entity is an entity who is preparing and presenting the financial statement, right? In consolidated financial statement, who is the reporting entity in consolidated financial statement? Parent. It is a group financial statement. So it's a parent consolidated financial statement. Okay. Sometimes one entity, parent, has control over the another entity subsidiary. If a reporting entity comprises both the parent and the subsidiaries, the reporting entity's financial statement are referred to as consolidated financial statement. Okay. If the reporting entity is the parent alone, the reporting entity's financial statement are referred to as a standalone financial statement or separate financial statement, as the case may be. Right? Is that clear? So these are the concept which is given: consolidated and unconsolidated financial statement. Okay. So this is financial statement and reporting entity. Then element of the financial statement. Okay. So let me write here. Financial statement and reporting entity. Element of the financial statement. Now, what is the element of the financial statement? Element of the financial statement. And in financial statement and reporting entity, so what is the financial statement? The component of FS is equal to, what are the component of FS? कौन से component है FS के? A, balance sheet, then B,
Statement
P&L.
of profit and loss.
Statement of profit and loss, right? C,
Statement of cash flow statement. Sorry, statement of cash flow.
Let me write a complete statement of P&L. C is statement of changes in equity. The third one is statement of changes in equity. D is statement of cash flows.
Notes to account.
Cash flows. And E is notes to accounts.
So now I am not using the account in the statement of profit and loss account. I removed the account.
Very good, right? Now your financial statement are standalone financial statement and standalone financial statement and consolidated financial statement. Consolidated financials. Okay. Yes. Elements of the financial statement. Now, what is the element of the financial statement? Asset, liability, equity. There are three elements to the balance sheet, and income and expenses. Right? So name any item. It will get fitted into these five elements. Name any transaction, any item. Okay. So this framework also talks about the element of financial statement, and it provides you the description or definition. It says that asset, as you know that economic resources word is used for asset, claim word is used for liability and equity. Okay. Equity means when shareholder is claiming, equity share is the equity is something where the shareholder is claiming, and liability is something where the lender and creditors are claiming. Okay. And asset is the economic resource. So the definition is given that what is an asset? A present economic resource controlled by the entity as a result of past event. And what is an economic resource? Which has a right and potential to produce economic benefit. Do you remember? Or if you have, by any chance, you have read any standard, it talks about when future economic benefit is probable, when cost can be measured reliably, right? So if an asset has a potential to produce economic benefit, a resource has a potential, it will become your asset. What is a claim? What is a liability? Liability is a present obligation of the entity to transfer an economic resource as a result of the past events. To transfer an economic resource as a result of the past event. What is equity? Equity is a residual interest. Equity is a residual interest. Okay. So this framework has given you the definitions of asset, liability, equity, income and expense. What is income and expense? You remember I have told you the definition of income and expense in Ind AS 1 when I was explaining other comprehensive income.
Yes,
income
sir.
is an increase in assets or decrease in liability, means income is increase in net assets. Increase in net assets due to a transaction happening with the party who are not the shareholders. Okay. Increase in asset or decrease in liability that result in increase in equity means net assets. Other than those relating to contribution from holder of equity claims. Who are the holder of equity claims? Shareholder. Shareholder. तो कितनी टेक्निकल डेफिनेशन दी हुई है? What is the simple definition? Income means increase in net assets due to a transaction other than shareholders. From other than shareholders. right? Simple. Expense, just reverse. So this is what, these kind of definitions have been given in this standard, the element of the financial statement. Okay. It talks about the right. It talks about the obligations. Okay. So you need to just read that. Okay. For example, ownership of land gives the entity the right to use land. And you know that when you have the ownership, it gives you the right. In the asset, you have a right to receive the future economic benefit. Okay. So it has given an example. Ownership of land gives the entity the right to use the land, the right to sell the land, and the right to give the land on the lease, the right to pledge land to obtain a secured loan, etc. However, these rights are normally bundled up as a single asset, land. As such, classification provides a faithful representation of those rights in the most concise and understandable way. What it says that, for example, if you have purchased an asset, what rights you have? You can use the asset, you can sell the asset, you can mortgage the asset, right? You can lease the asset. Yes or no? आपने एक घर खरीदा, you purchased a building. आप क्या कर सकते हो उस बिल्डिंग के साथ? What are the uses of that building? What are the rights you have?
It can be used, it can be sold, it can be
leased
or placed.
It can
Yes.
be placed. Okay. So you have
It can
purchased
be
a single
mortgaged.
it can mortgage. Yes. So you purchase a single building, but you got a lot of rights. So what you will capitalize in your balance sheet? All different rights, or only building?
Only building, sir.
Only building. You purchased a building, you will pass an accounting entry, building account debit to bank account. By purchasing a resource, by purchasing an asset, you are getting a right, you are getting a multiple right. Okay, because it's a resource. So this is what it talks about. It should have a potential to produce economic benefit, right? Potential to produce economic benefit. For example, by leasing a building, it gives you the rental income. By using the building, either you are running your business, you are producing goods, or you are conducting classes, so you are earning. Okay. So these kind of, benefits are there. So it can produce economic benefits. So these things are given. Control should be there, right? And what is a control? You have a present ability to direct the use of economic resource. Means if there is a control, you can use those assets for your own benefit, or you can restrict the others from using your asset. If you have purchased a building, what you will do? You will lock the door. Can others use that building without your permission? Answer is no. Can you use the building? Answer is yes. So this is the meaning of control which is given. Right? So there is a definition of liability which is given. So these elements of financial assets are defined in detail. Okay, in detail. You just need to read that. Okay. In examination, this kind of questions will not come. Just you need to have a fair idea. Okay. Equity, income, expenses. Just you need to have a fair idea about that. Is that clear? And why these things are given here? Let me tell you why these things are given. Because if there is no Ind AS, name any transaction. You have purchased a chair yesterday for your studies. You purchased a chair. What is this transaction?
It is an asset.
It is an asset. Chair. First of all, chair account debit to cash account. Whether it is an asset or it is an expenditure. It is an asset, right? Because you have applied PPE standard. PPE standard says that when future economic benefit is probable, it can be recognized as an item of PP, as an asset. Now the question comes, what happens if no standard is available? What happens then? Then you need to refer what? What you need to refer?
The elements of
Conceptual framework.
Yeah, conceptual framework.
That is why this conceptual framework has given you the details about these things, right? Do you have the right? Do you have the control? Then this conceptual framework is asking you a question about the chair. For example, you don't have any Ind AS to chair. Then now I am the conceptual framework. I am asking some set of questions. Have you purchased this item? You are saying yes. Do you have a control over this item? I am saying yes. Then then the question is, the next question is, do you have the right? Answer is yes. Right to use? Yes. Right to sell? Yes. Right to pledge? Yes. Okay. Right to lease? Yes. Right to gift? Yes. Okay. Whether this chair will produce future economic benefit? Answer is yes. Produce future economic benefit in terms of you will use this asset and you will study for long hours and you will become chartered accountant from that chair only. Right? So if you are getting these kind of answers, right, you will be able to conclude that, oh yes, it is an asset. It is an asset. Okay. Right. You will recognize that item as an asset. So friends, that is why in the conceptual framework, the definition of asset, liability, equity, income and expense is given. So friends, if you read all the asset-based standard, the definition of all the liability or all the income and expenses related standard, this definition is not given in every standard. PP. In PPE standard, asset is not defined. PP is defined, asset is not defined. So what you will refer to see the definition of asset, what you will refer? You need to refer the conceptual framework for financial reporting, right? There is only one standard Ind AS 38 intangible asset where asset is defined. And that asset definition is a little bit different than the conceptual framework definition. So when that standard will revise the definition of asset, the same definition of conceptual framework of the asset will come into that standard also. But for all other standards, you need to refer the definition of the asset which is given in the conceptual framework for financial reporting, right? So since if it is no Ind AS or there is an interpretation issue, that is why this element of financial statement is given so that you will be able to understand, is it an asset, is it a liability, is it equity, is it an income, is it an expense, how this item is going to be recognized. Okay. Friends, then this standard talks about the recognition or derecognition also, right? So once you have evaluated that yes, it is an asset, it is a liability. So when it is evaluated as an asset or liability, then whether it is going to be recognized or not recognized. So this standard also talks about the recognition and derecognition. Recognition and derecognition. You understand recognition and derecognition? Recognition means recording the item in the financial statement. Derecognition means removing the item from the financial statement. You understand these things? Yeah? Yes or no?
Yes,
Yes,
sir.
sir.
Yes. So this standard talks about the recognition. What is the recognition process? Recognition process is the process of capturing for inclusion in the balance sheet or the statement of profit and loss an item which meet the definition of one of the element of the financial statement like asset, liability, equity, income or expenses. So capturing in the balance sheet or in the P&L what? The element of the financial statement. The amount at which an asset, a liability, equity is recognized in the balance sheet is referred to as its carrying amount. Carrying amount bolte hai na? Carrying amount means the amount at which that item is carried in the balance sheet. This is known as a carrying amount. Okay, right? Opening balance sheet, statement of profit loss. So in opening balance sheet, your asset minus liability is equal to equity. बैलेंस शीट तो क्लियर है ना सबको? ये आपका एक तरफ आपका एसेट होता है, दूसरी तरफ आपकी इक्विटी होती है, और क्या होता है इक्विटी के अलावा? लाइबिलिटी होती है. Your asset is equal to equity plus liability. Your asset minus liability is equal to net assets, which is known as equity. Right? Your statement of profit and loss gives you income minus expense. Okay, income minus expense. So if I'll compare my opening balance sheet with my closing balance sheet, right? In my opening balance sheet, there are assets, there are liabilities, there is equity. Net assets. What is meant by net assets? Net assets is equal to
Equity plus retained earning.
equity means equity includes reserves and surplus also, right? In Ind AS, that word equity does not mean equity share capital only. The word equity means equity is equal to equity share capital plus reserves and surplus, which is plus other equity. Right? So equity is equal to equity share capital plus other equity. Ind AS में जो रिजर्व्स एंड सरप्लस है उनका नाम है अदर इक्विटी, राइट? सो इक्विटी इज इक्वल टू शेयर होल्डर फंड्स, इक्विटी इज इक्वल टू एसेट्स माइनस लाइबिलिटी। समझ में आ गया इक्विटी का मतलब? या
Yes, sir.
opening balance sheet, in opening balance sheet, for example, there are 1,000 rupees of assets and 600 rupees of liability. Then what are the shareholder funds?
400.
400. 1,000 रुपए का एसेट, 600 की लाइबिलिटी, शेयर होल्डर फंड कितने हुए? 400 के। व्हाट आर द नेट एसेट्स?
400.
400. What is the equity?
400.
400. Equity is equal to assets minus liability, right? Shareholder funds is equal to assets minus liability. Okay. Net assets is equal to asset minus liability. So you have the 400 rupees of equity. Equity means equity share capital plus reserves and surplus. So now during the year you have earned a profit. You have the income, you have the expenses. Now resultant number, you have the profit. So with this profit, your equity, your net assets, your shareholder funds will increase, decrease, or don't have any impact during the year.
Yeah, it will increase or decrease.
It will increase. In your equity, in your net assets, in your shareholder funds, if you have a profit, that profit will increase your equity. Yes?
Increase means income. Decrease means is expense.
Yeah. So there is a profit. Your income is higher, expenses are lower, there is a profit. That profit will flow to the retained earnings, reserves and surplus. Your shareholder fund will increase, net assets will increase, equity will increase. Right? Plus other changes in equity means not through the P&L. Not through the P&L. For example, the company has issued a rights issues. The company has made a right issue of shares. So right issue से क्या होगा? Capital बढ़ेगी. Equity share capital credit, bank debit, right? So whether your equity will increase or not increase by right issue?
Yes, it will increase.
It will increase. So your opening equity is impacted by your statement of profit and loss, result of statement of profit and loss plus result of other changes. Then it will give you the closing balance sheet. So for example, 400 rupees was the opening equity. 100 rupee was the profit during the year. 400 plus 100. And 200 rupees of equity shares were issued during the year. So 400 plus 100 plus 200. What is your closing equity?
700.
700.
700 is your closing equity, right? So these kind of dialogues is made in this conceptual framework of financial reporting, which you as a potential chartered accountant, aspiring chartered accountants, right, and CA final students, you are aware about this linkage of asset, liability, equity, income, expense, profit. Profit went to retained earning. Retained earning is a reserves and surplus, right? So these are the linkages. These are the recognition processes it talks about. Okay, right? So this is what, this is what it is given. Should I need to read it? Should I need to read it? Every line? Yes.
No,
So
sir.
talking about the recognition criteria, the standard talks about that whenever you recognize any asset, it should, an asset or liability will be recognized only if the recognition provides user of the financial statement with information which is useful. Again, it is saying the asset and liability will be recognized only if their recognition will provide the useful information. And what makes the information useful information?
Relevant information and faithful representation.
Relevant
Yes,
information
yes.
and
Faithful representation. It says that the information has to be relevant and information should be presented faithfully. It should present faithful representation of the assets or liability and of any resulting income, expense, or change in equity, right? It should be a relevant information and it should provide a faithful representation. Okay? So आप कब recognize करोगे asset और liability को? You will recognize your asset or liability when it provides you the relevant information and it gives you faithful representation. then only you will recognize your asset and liability. Is that clear? Is that clear?
Yes, sir.
Yes, sir, clear.
Relevance. Should I again explain the meaning of relevance?
It's not
It has
required.
to be material,
You already
predictive
explained,
value,
sir.
confirmatory value, right? Yes? Yes.
No, sir.
So information about asset, liability, equity, income, and expense is relevant to the user of the financial statement. However, recognition of a particular asset or liability and any resulting income, expense, or changes in equity may not always provide relevant information. That may be the case. For example, it is uncertain whether an asset or liability exists, or an asset or liability exists, but the probability of inflow or outflow of economic benefit is low. Okay. So the presence of one or both the factor described above does not lead automatically to a conclusion that the information provided by recognition lacks relevance. Moreover, factor other than those described above may also affect the conclusion. It may be combination of factors and not only a single factor that determine whether recognition provides relevant information. What it's saying? Let me explain you. It says that for recognizing an asset and liability, it should provide a relevant information. And for providing a relevant information, right, you have to make this information complete in all aspects. For example, if there is an asset, okay, if there is an asset, so whether the asset will be able to give you future economic benefit or not, right? Whether there is a probability, and what is meant by probable? The probable means more likely than not. More than 50% chances are there that the asset will be able to provide you future economic benefits. Okay. So you need to clear and you need to explain that when you are recognizing an asset, right? What is the relevant information you will provide? What makes it relevant? That you will also provide that whether that asset is into existence, right? Are you able to get the future economic from that asset, and whether it is highly probable? So these kind of things are required to be disclosed. Okay. Whether from the asset, whether the future economic benefit is probable or not, from the liability, whether the outflow is probable or not, right? So these things make the information relevant, and these things make it representing faithfully. Okay. For example, provisions. So whenever you are recognizing a provision, is it an actual number? Whether the provisions are actual?
It is a predicted numbers.
Provisions are not actual. Provisions are best estimate. So this is required to be disclosed. Means that provisions are measured on the basis of best estimate, and it is subject to the measurement uncertainty also. Okay. So this recognition and derecognition, there is a lot of guidance which is given in conceptual framework for financial reporting. What is derecognition? Derecognition is removing the assets and liability from an entity's balance sheet. Derecognition normally occurs when that item no longer meet the definition of an asset or a liability. Asset, when the asset will be derecognized, when the entity loses control of all or part of the recognized asset. Liability, when the entity is no longer required to pay the obligation. So when the asset is going to be derecognized, when the entity loses the control over the right of the asset. Okay. Liability, when the outflow is no longer probable. It is then there is a derecognition of the liability. Okay. This is derecognition, this is recognition. Okay. So you guys are already, by the time when you complete your financial reporting standard, financial reporting paper, Ind AS standards, you will become expert in recognition, derecognition, financial statement component we have already discussed, element we have discussed, what is asset, what is liability, what is equity, what is income, what is expenditure, what is meant by net assets, what is meant by shareholder funds, equity. You will become expert on all these aspects, right? These are the kind of the fundamental principles on which your accounting standard is existed. Okay. It's a very theoretical kind of a chapter, I would say. Then friends, it comes about a measurement. Okay. So after recognition and derecognition, this standard talks about measurement. And what is meant by measurement? What is meant by measurement? Tell me, what is meant by measurement?
At what value it should be measured?
Value will be recognized.
At what value it is going to be measured, it is going to be recognized, right? At what value? So standard has given you so many measurement bases, right? So elements recognized in the financial statement are quantified in the monetary terms. If anything which is not quantified, it is more like a qualitative. This requires the selection of a measurement basis. A measurement basis is an identified feature, for example, historical cost, fair value, or fulfillment value. Fulfillment value means current cost. Fulfillment value means value in use, right? It's more like a current cost. It's like a value in use of an item being measured. Applying a measurement basis to an asset or liability creates a measure for that asset or liability and for related income and expenses. To cut a long story short, your element of financial statement can only be recorded when it has a monetary value. And how this monetary value can be arrived, which is given in this framework, right? What this framework says that, this framework says that there are two kinds of measurement value. Number one, historical cost. Number two, current value. What is historical cost? What is historical cost? Historical cost means the cost at which you have acquired an asset. For example, you have acquired an asset. You have acquired a machinery for 10 lakh rupees on a credit basis. What is the historical cost of asset and the liability? What is
10
the
lakh.
historical cost of asset and liability? 10 lakh. Right. What is meant by current value? For example, you purchased a car and the life of the car is 10 years. You purchased the car at 10 lakh rupees. So what is the historical cost of the car? 10 lakh rupees. Life is 10 years. At the end of the first year, if you have opted for a historical cost model, then what you will do? You will only depreciate the car. Yes, you will only depreciate the car, correct? But
Yes, sir.
if you are using the current value approach, what is the current value approach? Current value approach means what is the value of this asset today? And when we are talking about the value of the asset, we are talking about the value of the rights which I will get from this asset. Okay. So what is the example of current value? Fair value. Fair value. Let's say you have purchased a share. इन्वेस्टमेंट, यू हैव मेड अ इन्वेस्टमेंट. आपने देखा होगा ना अपने ऑडिट डेज में, कंपनीज इन्वेस्टमेंट करती है म्यूचुअल फंड्स में, शेयर्स में, राइट? सो द कंपनी हैज परचेज्ड अ शेयर और म्यूचुअल फंड फॉर ₹1,000. व्हाट इज द हिस्टोरिकल कॉस्ट? 1,000. बट ऑन द रिपोर्टिंग डेट द फेयर वैल्यू, द NAV हैज इंक्रीज्ड, द मार्केट प्राइस ऑफ द शेयर हैज इंक्रीज्ड. So the fair value or net asset value of that mutual fund is 1,500 rupees. So friends, what is the historical cost and what is the fair value?
Historical cost 1,000 and fair value 1,500.
Yes, historical cost is 1,000 and fair value is 1,500. Very good, right? Value in use. What is meant by value in use? You read this concept. In Ind AS 36, impairment of asset, or AS 28, impairment of asset. The value of the asset can be fetched by two ways, right? Number one, if you go to the market and you will sell the asset, you will get a value. Number two, how come you will get the value of the asset? By using the asset. The value of the asset can be arrived in two manners. Number one, by selling the asset. Number two, by using the asset. So when you are selling the asset, it is a fair value. When you are using the asset, it is a value in use. Present value of future
inflows.
Present value of future cash flows. Okay. What is your current cost? Current cost of replacement. If today you will replace that asset, then what is the current cost as of today? What is the cost which I am going in the market and will buy that asset? Okay. So these are the kind of measurement basis which is given in this standard. Your largely your historical cost and the current value. Your current value is largely your market value or the fair value. Okay. So these are the measurement basis which is given in this framework. Okay. If you see the language is little technical, but not to worry. So this is a conceptual framework. Whatever you understood or whatever I have explained and whatever you will read in the respective Indian accounting standard, you have to write in your own language, like your fair value. You read this fair value concept in detail in Ind AS 113 fair value measurement, right? So don't look at this conceptual framework in isolation. Just see this conceptual framework in totality with all the standard, right? For example, if I talk about asset in the balance sheet, historical cost, right? Carrying amount, primary value. So historical cost to the extent unconsumed, uncollected and recoverable. So आपकी बैलेंस शीट में अगर आप हिस्टोरिकल कॉस्ट मॉडल अप्रोच यूज कर रहे हो, you purchase the car at 10 lakh rupees. Okay. So what is the value of the car at the end of first year? 1 year consumption you have done, you will charge depreciation. Your carrying amount using the historical cost will be the unconsumed portion of that asset. Yes or no?
Yes, sir.
है ना? 9 साल बचे ना, 1 साल खत्म हो गया, 9 साल बचे हैं, तो 10 लाख रुपए की गाड़ी थी, 10 साल आपकी यूजफुल लाइफ थी, तो आप क्या करोगे? उसको 1 लाख रुपए डेप्रिसिएशन करोगे एंड 9 लाख रुपए इज द कैरिंग वैल्यू यूजिंग द हिस्टोरिकल कॉस्ट अप्रोच, राइट? एंड while using the historical cost approach, if there is any directly attributable cost, any transaction cost, you will also include that cost. आप करते हो ना उसको ऐड, मशीन के साथ आप इंस्टॉलेशन भी तो ऐड करते हो, ट्रांसपोर्टेशन कॉस्ट भी तो ऐड करते हो, कार के साथ भी तो आप रजिस्ट्रेशन कॉस्ट को ऐड करते हो, करंट कॉस्ट. व्हाट इज योर करंट कॉस्ट, राइट? एंड इन योर बैलेंस शीट, what is the carrying amount if you're using the current cost approach? Current cost to the extent unconsumed or uncollected and recoverable, right? That what is the current cost of replacement if I'll buy any car from the market as of today, which has a remaining life of 9 years? What is my current replacement cost, right? And of course, if you are paying any transaction cost, it has to be included. ये समझ में आ गया? आपको पढ़ने के लिए लैपटॉप चाहिए, आप नया लैपटॉप लेने जाओगे मार्केट में, राइट? आपको 50,000 का मिलेगा. तो आपने अपने दोस्त को बोला कि भाई मुझे ना कोई 2 साल पुराना लैपटॉप दिला दो. आर यू गेटिंग मी? You are talking to your friend, you are saying that, my dear friend, the new laptop cost me a lot. I just wanted to attend the lecture, the live lecture classes of ICAI. So can you please arrange a 2-year-old laptop to me? So 1 to 2-year-old laptop will work for me, right? And then he is saying, okay. Then you are asking, what is the price? At what price I'll get my 1 or 2-year-old laptop? So he will say that the new laptop cost you 50,000 rupees, but 1 or 2-year-old laptop will cost you around 25 to 30,000 rupees, right? So that is the current cost. That is the current cost. Is this clear or not clear? Fair value means the price that would be received to sell the asset. If you are going into the market and you are selling your asset today, what is the price you will get? That is the fair value. And in fair value, you are not required to deduct the transaction cost. It is a market value. Value in use, the present value of the future cash flows by using the asset. You are not selling the asset, you are using the asset. When you are using the asset, what is the value, what is the present value of the future cash flows you are getting, right? So that will become the carrying value of your asset in the balance sheet using those measurement basis, right? So friends, these are the measurement basis which is given in this framework. Okay. Yes. So in very detail these things are given. Okay. So again, for using any measurement basis, what is the factor? What is the factor you will use? What is the factor you will use for using any measurement basis? It has to be relevant and faithful representation should be there. Okay. Means relevant means asset or liability characteristics, contribution to future cash flows you need to look at. Your asset, right? What is the characteristics of that asset or liability, right? And what is the contribution to future cash flows? Okay. For example, your investments are for trading, right? If the company needs the money, the company can sell the investments. In that case, the investment has to be measured at fair value, right? But if the company has made an investment in debenture for 10 years and the company will and the company will not be able to redeem those debentures. The company will redeem the debenture only after 10 years. Then, whether this fair value approach gives you the relevant information. आपने किसी जगह पे इन्वेस्ट किया और आपको 10 साल के बाद ही उसका पैसा वापस मिल सकता है. द मनी विल बी रिटर्न ओनली आफ्टर 10 years. So just recognizing on fair value, restating on fair value, measuring on fair value on every reporting date, is it give you relevant information?
No, sir.
No. Why? Because you will not be able to sell that asset and you will not be able to get the money. But the asset is available for trading. You invested in mutual funds. Whenever you need the money into the business, you can easily sell and get the money into the business. In that case, whether this cost model, historical cost model, gives you the relevant information, or this fair value model will give you the relevant information.
Fair value model. Fair value,
so that the users will be able to know, oh, this is the amount which this entity can fetch, which this entity can realize. Okay. Faithful representation, of course, consistency. It's not like that, first year cost model, second year fair value model, third year value in use model, fourth year replacement cost model. No. So there should be consistency and certainty. Okay. Right. So this is what it is given in the framework. To cut a long story short, for recognition, derecognition, for measurement, again, you have to see two aspects. That has to be relevant and that has to be faithful representation. Faithful representation. Okay. Certainty means if you are doing a fair valuation or if you are computing a value in use, your factors which you are determining, it has to be a logical factors. It has to be logical factor. For example, a company was computing value in use. And what is a value in use? Value in use is the present value of future cash flows. Present value of future cash flows. अब आप जब फ्यूचर कैश फ्लोज निकालोगे तो you will recognize, you will compute the future cash flows for a definite period. आप एक definite period का निकालोगे ना future cash flows, yes or no?
Yes, sir.
Yes, it has to be for a definite period. Now, what should be the definite period? That definite period should coincide with the useful life of the asset.
Yes, sir.
Right? It has to be with the useful life of the asset. The useful life of the asset is 5 years. Right? The definite life of the asset is 5 years. And beyond that, whether the asset will survive or not survive, it depends in future. Right? Today, the best estimate about the useful life is 5 years. Now the question is, while computing the value in use, should you take the cash flow for 5 years or cash flow for 7, 8 or 10 years?
Only for 5 years.
Up to 5 years.
Up to 5 years. So you should not take the element of uncertainty. Okay. So you should, for applying the measurement basis, and that measurement basis should provide a faithful representation. The measurement basis has to be consistent and the certainty should be there. It should not like, might be I will be able to use this asset for 10 years. So I will compute the cash flows for 10 years. Answer is no. Whatever is certain as of now, those period of cash flow needs to be discounted to arrive at value in use. Is that clear? Is that clear? Yes or no?
Yes, sir. Thank you, sir.
Yeah. So illustration, let's discuss it. The directors of Ind Limited are particular about usefulness of the financial statement. They have opined that although Ind AS implement a fair value model, Ind AS are failing in reflecting the usefulness of the financial statement as they do not reflect the fair financial value of the entity. These directors are saying that while the entities are providing the fair value of assets and liability, but they are not providing the financial value of the entity. So whether Ind AS are supposed to provide the financial value of the entity, whether entity valuation is part of the financial statement, answer is no. So the directors are not clear about even the framework of the financial statement, right? Discuss the views of the director as regard the use of the fair value in Ind AS and the fact that the Ind AS do not reflect the financial value of an entity, making a special reference to the relevant Ind AS and the conceptual framework, right? Let's read the answer, what this conceptual framework says. treatment under Ind AS. The statement of the director regarding Ind AS implementing a fair value model is not entirely accurate. This is not correct. Although Ind AS do use a fair value and present value, it is not a complete fair value system. Ind AS are often based on the business model of the entity and the expectation of realizing the asset and liability related cash flows through the operations and transfer. It is notable that what was preferred is a mixed measurement system with some item being measured at fair value and some item being measured at historical cost. Okay. So friends, to cut a long story short, very technical answer is given. You should write that the opinion of the director that Ind AS is not providing the fair value is not correct. Okay. It is not correct. Second, the company is following a mixed measurement model. On few items, the company is following a present value model, which is value in use. On few item fair value, on few item historical cost, right? And nowhere the entity valuation is required to be disclosed in the financial statement. It is only restricted to the asset and liabilities of the entity, right? Then the framework has given you the definition of fair value, etc., in your in the answer. It is not required, right? In Ind AS 113, you can only give the definition of Ind AS, okay? And then the standard has given you the framework has given you the examples. Means in this question, the examples has been given. For example, Ind AS, it talks about revaluation model. Fair value of investment property is not allowed. Ind AS 38 allows cost and revaluation model. Ind AS 109 financial instrument allows fair value model. Okay. So the point is what directors are saying only fair value model is allowed. So not only fair value model is allowed, it's a mixed measurement model. At times it's a fair value, at times it's historical cost, at times it is a what? It is present value model also. And the entity valuation is not allowed at all in the financial statement. Okay. So this is what it is written in the answer. Okay. Yes. So not much relevant this part. Okay. We talked about the measurement basis also. Presentation and disclosure. Again, you know, this conceptual framework runs on only two aspects: measurement and presentation and disclosure. Again, what are the two aspects on which this framework is running in terms of recognition, derecognition, in terms of measurement, in terms of presentation and disclosure? Tell me, what are those two aspects? What are those two aspects?
Relevance and the faithful
Relevance and faithful
representation.
Relevance and faithful representation. The information has to be relevant. Relevance and faithful representation. Right. Your recognition, your measurement, your presentation and disclosure. How come? Your presentation and disclosure will provide the faithful representation. Again, the same example of cost model, revaluation model. You remember that example?
Yes, sir.
With the help of the disclosure, you will be able to take the right decision. So again, it says that you have to make an adequate disclosure. You have to make a right presentation and you have to make an adequate disclosure so that your information will become relevant. When you are looking at 1000 crore of fixed asset become 1500 crores, whether that information was relevant. That information was not relevant till the time you get the breakup of that movement from 1000 to 1500. Is it on account of addition? Is it on account of revaluation, right? Who has done the revaluation? What is the revaluation surplus? So without those kind of information, the information has not become relevant information. Okay. So again, it says that you have to give an adequate disclosure so that your information will become a relevant and faithful. It represents faithful representation. Okay. So these are the guiding principles for presentation and disclosures. These were the guiding principles of presentation and disclosures. Okay. Then friends, so it talks about your classification, offsetting, etc., which we have read in Ind AS 1. Aggregation. You remember we have read all these aspects?
Yes,
or
sir.
no? Yes. Okay. Now the last concept is concept of capital and capital maintenance. What is the concept of capital and capital maintenance? You guys have read this concept in CA Inter also. Can you tell me what is the concept of capital and capital maintenance? Can you tell me what is the concept of capital and capital maintenance? Anyone who
Sir,
can just try to attempt?
sir, how the entity define the capital and how it maintaining the capital assets?
Okay. Yes. So concept of capital is quite simple. Okay. Capital means your equity share capital, the money which you are deploying in your business, the money which you are investing into your business, right? But what about capital maintenance? Okay. So capital maintenance means maintaining a capital. For example, let me give you an example. In the beginning of the year, you have 1,000 rupees. Okay. You have 1,000 rupees. And you have to purchase some registers, some copies. And the copies cost 100 rupees. So how many copies you will be able to purchase in 1,000 rupees?
10.
10 copies, right? So you have the opening capital of 1,000 rupees, and in the opening capital of 1,000 rupees, in the opening capital of 1,000 rupees, you can buy 10 copies. Now in the full year, you have not spent any amount of money. And in the closing, your capital is 1,000 rupees only. You have the money of 1,000 rupees only in your pocket. Tell me whether your capital is increased, decreased, or neutral.
In terms of the present value, it is decreased, sir.
Okay. So, but let's talk about nominal. Let's about nominal value concept. Nominally, your 1,000 is 1,000. Is it increased, decrease, or whatever?
It's neutral. Neutral.
But let's forget about the time value of money concept. But now, in 1 year, the copies which were costing 10 rupee now, 100 rupee now, it become 200 rupees. It become costlier now. It become 200 rupees. Tell me whether the capacity of your capital, it has diminished or it has not diminished.
It's diminished, sir.
Yes. The productive capacity, the operating capability. So now earlier in 1,000 rupees, you can buy 10 quantity, but now in 1,000 rupees, you can only buy 5 quantity. Means the purchasing power has gone down. Your capital in terms of quantity, your physical capital has gone down. Your purchasing power has gone down. Your financial capital might be nominal. Your financial capital might be this financial capital has not diminished, but your physical capital has got diminished because the quantity, the operating capability, the productive capacity which you are having in the beginning of the year, you are not having in the closing of the year, right? So this is the concept of capital and capital maintenance. Financial concept which talks about what is the money you have invested. Have you able to continue with the same amount of money, or have you grown your money? That is invested money concept and purchasing power concept. And what is the physical concept? Physical concept is on the basis of productive capacity. We'll understand with the help of an example, right? And how you maintaining your capital, your financial capital maintenance and your physical capital maintenance. These are your, what is this? These are your, concept of capital and capital maintenance. So let's understand this with the help of an example. A trader commenced a business on 1st January 2001 with rupees 12,000 represented by 6,000 units of a certain product at rupees 2 per unit. So he has invested 12,000 rupees of capital. He has purchased 6,000 unit of material at the rate of rupees 2 per unit. Okay. During the year, he sold these units at 3 rupees per unit and had withdrawn rupees 6,000. So what he did? He purchased 6,000 units at the rate of rupees 2 and he sold these units at the rate of 3. So how much money he has invested?
12,000.
How much money he has received by selling these goods?
18,000.
18,000. 6,000 at the rate of 3. And how much money he has withdrawn? 6,000.
6,000.
6,000.
So how much money he has left with? How much capital he has left in the business?
Initial like 12,000.
12,000.
12,000, na? 18 minus 6, 12,000, right?
Yeah, 12,000.
And
Yes, sir.
how much capital he has introduced?
12,000.
12,000. Okay. So opening equity was 12,000, opening capital. Closing equity is also 12,000. What is the retained profit? What is the retained profit?
0 rupees, sir.
Zero, nothing.
Because he has withdrawn whatever he has earned a
All the
profit, he has withdrawn. मतलब जितना profit आया उतना dividend चला गया तो zero retained earnings. The trader can start year 2002 by purchasing 6,000 unit at the rate of 2 rupees per unit once again for selling them at 3 rupees per unit. The whole process can repeat endlessly if there is no change in purchase price of the product, right? If it is running on nominal value, then there is no problem. But what happens if the purchasing price has changed? So in your business, what is happening in your business? What is happening in your business? In your business, what is happening? So whatever profit you are earning, you are withdrawing the profit. Okay. So whether your business will be able to grow, your business will not be able to grow. You will be able to sustain your business provided the purchasing power will not go up, right? The purchase price of the product will not go up. Your purchasing power will not diminish. You will be able to sustain your business. अब हर साल क्या करोगे? 2 रुपए पे 6,000 यूनिट खरीदोगे और 3 रुपए पे बेच दोगे. But there is a big assumption which is not right assumption, which is theoretical assumption. वो assumption क्या है कि आपको हमेशा से प्रोडक्ट 2 रुपए में मिलता रहेगा. The price will not change. Okay. So this is a nominal value concept. This is a nominal value concept. This is a nominal value concept. Okay. Then, friends, what happened? In the previous, now, assuming the nominal value will change, then what will happen? So your financial concept is on the basis of nominal concept, whether your capital is maintaining, increasing or decreasing. So this is on the nominal concept. You are saying that I have been able to maintain my capital even after withdrawing my funds. Then the financial concept is on the basis of purchasing price also, right? What is that? Let me tell you. In the previous example, suppose that average price indicate at the beginning and at the end of year are 100 and 120 respectively. Means there is a 20% inflation. 100 and 120 means the price index, right? Opening equity is 12,000 represented by 6,000 units at the rate of 2 rupees per unit. Opening equity at closing prices. Opening equity at closing prices. What is your opening equity at closing prices? So end of the day, you are left with 12,000 rupees. आपने 12,000 रुपए लगाए. End of the year में आपके पास 12,000 रुपए हैं. End of the year में 12,000 रुपए हैं आपके पास. Okay. तो आप क्या करोगे? So what is the value of this 12,000 rupees? 12,000 divided by 100 multiplied by 120. It has to be 14,400. Means if you have to maintain 6,000 quantity and when you multiply by 2.4, how much capital you are required to maintain a quantity of 6,000 product in your business?
2,400.
14,000. Is that clear to everyone? सबको clear है या नहीं है? Is
Yes,
this
sir.
clear to everyone?
Yes, clear.
Yes, sir. Yes, sir.
Clear है ना? क्यों? आपको पहले in the first case your price was not changing. You are able to invest for 6,000 quantity. Again, you are able to maintain 6,000 quantity. But now since price are increasing, so if you want to trade in 6,000 quantity, you need a capital of 14,400. So in this case, what is your closing equity? Your closing equity at closing price, your closing equity is 12,000 only, na? So what is your retained profit? Assuming the same scale of business, your financial capital is decreased by 2,400. This is the capital maintenance concept. This is a financial concept of capital maintenance. Is this clear to you or not? Technically speaking, nominal value, looking at the number, you are saying, sir, I am able to maintain my 12,000 rupees of capital. Is it? Considering into the purchase price, are you able to maintain? Answer is no. Why? Your purchase price has gone up. your number of quantity will reduce, right? So in this case, you have a negative capital of 2400. The negative retained profit indicate that the trader has failed to maintain his capital. The available fund of 12,000 is not sufficient to buy 6,000 unit again at increased prices. In fact, he should have restricted his drawings to 3,600. He should not have withdrawn entire 6,000. He should have restricted the drawing to 3,600 so that he is able to maintain his business. तभी तो ये सारी कंपनी जितना प्रॉफिट कमाती है क्या सारा डिविडेंड दे देती हैं?
No, sir.
They are not giving all the dividend. Why? Because they have to cope up with the increasing inflation, increasing prices. Their input cost is also increasing. Their employee salary is also increasing. Okay? Right? Is that clear? So this is the financial capital maintenance concept on the basis of purchasing power. Now, what is the physical capital maintenance concept? What is the physical capital maintenance concept? So let me explain this concept. In the previous example, suppose the price of the product at the end of the year is 2 rupees 50 paisa. In other words, specific price index is 125. 2 रुपए का 2 रुपए 50 पैसे हो गया, 25% बढ़ गया. Current cost of the opening stock 12,000 by 100 multiply by 125. आपका क्लोजिंग में वैल्यू कितनी चाहिए 6,000 यूनिट के लिए? 15,000 चाहिए ना?
Yeah, 15,000, sir.
Closing cash after adjustment of stock at current cost 6,000 multiply by 2.5, right? 6,000 multiply by 2.5 minus 6,000, which is 9,000. So closing cash after adjustment of stock at current cost. आपका टोटल कितना चाहिए आपको? 15,000 रुपए चाहिए. 12,000 divide by 100 multiply by 125. What is 12,000? 12,000 is your opening stock, right? But what is the value? The value was 2 rupee. How much value is increased? The value is increased by 25%. The value is increased by 25%, right? Is this clear? So what is the value of the opening stock in the closing? What is the value of the opening stock in the closing? कितनी वैल्यू है?
15,000.
15,000 है वैल्यू, राइट? और आपका 15,000 की वैल्यू है ओपनिंग इक्विटी एट क्लोजिंग करंट कॉस्ट. अगर मैं क्लोजिंग की बात करूं तो मेरी ओपनिंग में 15,000 रुपए की वैल्यू का मेरा स्टॉक है, राइट? अगर मैं क्लोजिंग नंबर की बात करूं. और अगर मैं क्लोजिंग इक्विटी की बात करूं, तो मेरे पास कितने वैल्यू का स्टॉक है?
9,000.
और ये 9,000 कैसे आया?
15 minus 6,000 is 9,000.
15 minus 6,000 is 9,000. ये 6,000 क्या है?
Withdrawable amount.
Sorry,
This is increase in cost, sir.
this is increase in cost. 6,000 is
Yes.
increase in cost. Increase in cost is 6,000 or 3,000?
Increase in cost 3,000, sir. Yes.
So आपका ये थोड़ा सा यहाँ पर थोड़ी कंफ्यूजन दे दी है इसने. आपका क्लोजिंग कैपिटल कितनी बची थी? 12,000 रुपए की बची थी क्लोजिंग कैपिटल.
Yes.
12,000 की बची थी ना क्लोजिंग कैपिटल, 12,000 की थी ना.
Yes. Yes.
आपका 2 रुपीज से 2 रुपी 50 पैसा हो गया. 6,000 यूनिट पे 50 पैसे बढ़ गए तो कितना बढ़ गया?
3,000.
3,000. So what is the value of your 12,000 rupees? Assuming 6,000 quantity you need to buy. तो उसकी वैल्यू 9,000 रुपए हो गई ना.
Yes, sir.
ये क्लियर है नहीं है? मतलब उसकी वैल्यू कितनी रह गई? 9,000 रुपए वैल्यू रह गई ना. अगर आपको 6,000 यूनिट अगर करने हैं तो उसकी वैल्यू 3,000 रुपए गिर गई फिजिकली, क्योंकि आपकी कॉस्ट बढ़ गई है, राइट? सो रिटेन्ड प्रॉफिट इज व्हाट? 9,000 minus 15,000. Your retained profit is negative 6,000. Negative 6,000 is your retained profit, right? So the negative retained profit indicate that the trader has failed to maintain his capital. The available fund of 9,000 is not sufficient to buy 6,000 units again at increased prices of rupees 2.5 per unit. There should not be any drawings in the year. Right? ये आपको मुझे लगता है क्लियर हुआ नहीं है. आपको क्लियर हुआ या नहीं हुआ?
Yes, sir. Please explain this 9,000 once again.
Let me explain here. Purchase. What is the value of the purchase? 6,000 unit at the rate of 2 rupees per unit. At the rate of 2 rupees per unit. So what is that? 12,000. Right? Now, what is the sale price? What is the sale price? 6,000 at the rate of 3. What is that? Sorry, 18,000. 6,000 at the rate of 3, 18,000. Right? How much is the profit? How much is the profit?
6,000.
6,000.
6,000 is the profit. Right. And what is the drawing? What is the drawings?
It's also 6,000.
6,000 is the drawing. 6,000 is the drawing. So how much cash you have arrived? So whatever is your profit, the entire profit is withdrawn. Right? So opening capital, your opening capital. What is your opening capital? Your opening capital was 12,000, right? यही आपने इन्वेस्ट किया था, ये आपने इन्वेस्ट कर दिया था. What is your closing capital? Closing capital कितनी है?
It is also 12,000.
12,000 ना, क्योंकि आपने क्या किया, आपने जो प्रॉफिट कमाया वो प्रॉफिट आपने पूरा का पूरा विड्रॉ कर दिया. Your closing capital is 18,000 minus 6,000, 12,000. Now same opening capital, right? Your purchases, because you are looking at the physical capital maintenance concept, right? Your cost, your closing cost. What is your closing cost of the product? It becomes 2.5. ये कितना हो गया आपका?
2.5 रुपीज हो गया.
2.5 हो गया ना, तो 2.5 हो गया तो
total.
इसकी वैल्यू क्या हो गई? 15,000.
Yes.
राइट? मतलब आपका ओपनिंग में भी शॉर्टफॉल है. अगर 6,000 क्वांटिटी मेंटेन करनी है तो 3,000 रुपए का शॉर्टफॉल है आपका. ठीक है? आपकी सेल कितने पे होगी? 18,000 पे सेल होगी. ठीक है ना? आपका प्रॉफिट कितना होगा? व्हाट इज योर प्रॉफिट?
Only 3,000.
Only 3,000 will be your profit. What is your drawing? 6,000.
6,000.
What is your closing capital? 12,000. So आपका प्रॉफिट 3,000 है और आपके प्रॉफिट में आपका प्रॉफिट कितना? 3,000 है और आपने 6,000 रुपीज विड्रॉ कर लिए. इसका क्या मतलब हुआ? ये आपका क्लोजिंग कैश है. ये आपका क्लोजिंग कैश है. दिस इज योर क्लोजिंग कैपिटल और क्लोजिंग कैश. But is this a right number? This 12,000 is the right number. आपका यहाँ पे डेफिसिट है 3,000 का. You can just think about, you have not invested 12,000 rupees. You have not invested 15,000 rupees. You have invested 12,000 rupees as a capital. So probably you must have been taken 3,000 rupees as a liability. मतलब अगर मैं एज्यूम करूं मुझे 6,000 क्वांटिटी परचेज करनी है एट द क्लोजिंग वैल्यू जो कि 2.5 रुपए की है, तो इसका मतलब मैंने 3,000 की लायबिलिटी ली होगी, है ना? यस और नो?
Yes, sir.
बिकॉज मैंने तो इन्वेस्ट 12,000 किया है. अब मैंने 3 रुपए का बेचा तो 18,000 रुपए आ गए. ओके, प्रॉफिट 3,000 का हुआ. ड्रॉइंग मैंने 6,000 की कर ली. मेरे पास क्लोजिंग कैश 12,000 का बचा और फिर अब मैं रिफंड करूंगा, रिफंड ऑफ लायबिलिटी 3,000 की. तो मेरे पास कितनी कैपिटल बचेगी?
9,000.
Is this 9,000 clear?
Yes,
So what
sir.
is this 9,000? This 9,000 is, assuming the closing value of the product, the capital which you are investing, it is already in shortage, right? If you have to maintain 6,000 quantity, the money which you have invested 12,000 rupees at the opening value, if you compare this with closing value, right? The capital has already, there is a shortfall in the capital, right? How that shortfall can be met? That shortfall can be met by having a less drawings, that shortfall can be met, right? By not having any drawing, that shortfall can be made. अगर जीरो ड्राइंग होगी तो क्या होगा, आप कहां पहुंच जाओगे, 15,000 रुपीज की कैपिटल पे पहुंच जाओगे, एंड यू विल बी एबल टू मेंटेन योर कैपिटल. आर यू गेटिंग मी?
यस सर.
ये समझ आया या नहीं आया?
आया
Yes,
सर.
sir. Now clear.
This is the physical capital concept. This is the physical capital concept. Anushi, is this clear? Neha, Priya, is that clear?
Yes, sir.
So this is what in this framework it is saying, that what is this? It is saying that the negative retained earning profit indicates the trader has failed to maintain the capital. The available fund 9,000 is not sufficient to buy 6,000 units again at increased price of 2.5. There should not be any drawing in the year. Had the trader withdrawn nothing during the year, instead of 6,000 rupees, he would have left with 15,000 rupees. Samajh aa gaya? The fund required to buy 6,000 units at the rate of 2.5 per unit. So financial capital maintenance at historical cost, 12,000 rupees, 12,000 rupees. This is the nominal value concept. Now financial capital concept at purchasing power. Purchasing power mein kaise hai? So as we have seen, 12,000 opening capital, your closing capital, if you have to maintain 6,000 quantity, you need 14,400. 2,400 is the negative retained profit. Physical capital maintenance concept, your closing capital at current cost is 9,000. 15,000 was your opening capital. So your retained profit is negative 6,000. And I have explained you this thing. Right? I hope this is clear to everyone, my dear friends. My dear friends, again, coming back to this Excel file. Friends, we started with the conceptual framework of financial reporting. We discussed what was the purpose of the conceptual framework. Then we discussed objective of the general purpose financial reporting. We discussed the qualitative characteristics of the useful financial information. And we talked about fundamental and enhancing. We talked about relevant and faithful representation. We talked about comparable, verifiable, timeliness, and understandable. Then we spoke about financial statement and the reporting entity. Then we also talked about the element of the financial statement. It is defined in the conceptual framework. We talked about recognition, derecognition, measurement basis, historical cost, current cost, which is fair value, value in use, presentation and disclosure, and all these aspects are on the basis of relevance and faithful information. It depicts the relevant and faithful representation of the information. Then we talked about the concept of capital and capital maintenance, and in this we talked about the two kind of concept. Talked about the two kind of concept: financial capital and physical capital. Right? Financial capital, there are two approaches of the financial capital, right? What are the two approaches of the financial capital? The two approaches are what? Nominal,
Historic and nominal,
value,
and current purchasing.
and purchasing power, and current purchasing power. What is the physical capital? Physical capital means evaluation of capital on the purchase price, right? On the purchase price. Evaluating opening capital also. Right? Okay. Is that clear? So this was the entire conceptual framework of financial reporting. So friends, it was theoretical. I tried to make you guys understand with the help of a lot of example in this presentation. Thank you so much, my dear friends. And you will expect a theoretical question from this conceptual framework. So please read that and listen this video again. All these concepts will be clarified. And when you will complete your financial reporting, you will become master of this conceptual framework. Okay. Thank you so much, guys. Thank you so much. Wish you all the best.
Thank you so much, sir.
So thank you so much, sir.
Thanks, Megha. Thanks, everyone. Thank you so much.
Thank you, sir.
Thank you.
Thank you, sir.
Session over, Ashok ji. Thank you. Thank you.